President Biden urges on his negotiating team as House Speaker McCarthy signals a debt ceiling deal could be struck this weekend. Stock futures are higher. G7 leaders are meeting in Japan as they weigh more curbs on Russia. Sources tell Bloomberg Volodymyr Zelensky will attend in person. We are live in Hiroshima. Plus, Fed officials sound increasingly split over policy at next month's meeting, prompting traders to lift bets for a hike.
Tom, let's take a look at the futures. Look, for the moment, we had quite a quiet week, I would say, as we really look at the debt ceiling looming, the fact that there does seem to be more noise that we'll get something. So for the moment, FTSE futures getting some 0.3%. And then, of course, we look at the individual stocks with some of the earnings. Yeah, and the mood music coming out of Washington does seem to be matched now by action, as you hear that the two sides are lining out that potential vote. So that optimism coming through, and certainly saw you lift the S&P yesterday up to the highest level in about 9 months, and the Nasdaq as well adding to gains. The open now, the FTSE 100 taking that baton from the optimism over in the US. The optimism currently gaining for 0.3% on the FTSE 100. China, though, is still a drag. The concerns about the data coming through out of China, and then Alibaba with a miss in terms of its sales as it looks to spin off the once profitable part of the cloud business. So China, a potential drag on this global economy, at least less of a catalyst than maybe some had expected. The German DAX currently gaining 0.4%. Over in France, the upside adding 22 points. The Spanish IBEX gaining 0.3%. Let's switch it over and see how things are playing out across the sectors. Of course, when it comes to the yield story in focus for us again, yields edging up at the front end. 4.29, 4.2 the last time I checked, or close to 4.1 level in fact on the 2-year. We're not showing it here, but the 2-year did see a bit of action yesterday on that repricing around the potential for another hike coming through from the Fed in June. Markets now seeing about a 40% chance of that as we weigh up the commentary, the mixed picture coming through from those Fed officials. I did want to zero in on the tech space over in Hong Kong. So the losses there of more than 2% today. Alibaba is certainly part of the mix there. The drag, again, on the news, the disappointment on the earnings front, and then the surprise in terms of the announcement coming through from the CEO around a potential spin-off of the cloud business as well. Futures in the US, flat after the strong rally that we saw yesterday. The yen has gained today on the back of inflation that came in line with expectations, but it is showing that move higher and challenges the view that maybe the yield curve control policy will have to be rethought by the Bank of Japan. So you're seeing a bit of strength still for the Japanese yen, 0.4%. Whether or not that leads to a pullback in terms of the equity moves that we've seen, and so far the Nikkei in the session today has actually had a positive session because, of course, you've seen 7 straight weeks of inflows in terms of foreign capital moving in to Japanese stocks on the back of expectations that there is a positive growth picture for Japan and the corporate picture in terms of the return of cash to shareholders, that optimism. Will a stronger yen prove a bit of a setback for that? Currently in the session today, the answer is no. Brent currently trading at $76 a barrel, so an upside of around 1% for oil. We're going to be breaking this story down for you with Bank of America in the next 30 minutes. Get their views on why they think oil is going to get to about $80 by the end of this year, but not much higher, and as well expectations around OPEC Plus, that meeting in June. Fran. Now let's dig a little deeper into the sectors. Out of the 20 groups that make up the stock 600, 19 on the up, Tom. So we have basic resources getting some 1.1%, financial services, technology on the up, and then we have real estate and travel and leisure a little bit on the way down. Now watch out for data a little bit later today, and then of course we really get into the tough negotiations over the weekend as President Biden flies back to Washington, and we'll see whether there's an end in sight on this debt ceiling debacle by next week.
Yeah, as we said,
American lawmakers are making progress then on those debt ceiling talks. As Speaker Kevin McCarthy says, he expects the House to consider a deal next week. Let's get more then with Bloomberg's Bill Ferries. Bill, is a deal then actually within sight?
Well, both sides are saying the kind of things that are making markets happy. Both President Biden and Kevin McCarthy saying that they think they're headed in the right direction and that a preliminary deal could be reached as soon as the end of this weekend. So that's good news. It's definitely what's needed at this point if a deal is going to get done in time.
So, Bill, what are the known and unknown hurdles still facing a deal? I have to say, you know, a lot of investors are optimistic but also skeptical until something's signed.
Absolutely. You don't have a deal until you have a deal, right?
You have a deal.
What we have to watch carefully, for is whether some of the more far-right Republicans and far-left Democrats object to the terms of this agreement. All we know now is that both sides seem to be making progress, but until the members see what's actually on the table, it's going to be hard to know whether both sides have the votes to get it through. In particular in the Senate, whereas, you know, one senator can really do a lot to hold up legislation if they aren't happy with it.
Bill, thank you so much. Bill Ferries, the very latest on this debt limit. Of course, deadlock for the moment, progress. What happens in the next 24 hours is anybody's guess. Now, let's get straight to Wei Li, BlackRock Global Chief Investment Strategist, who joins us with a look at the markets and the U.S. debt ceiling. Wei, as always, thank you so much for coming on. When you look at the debt ceiling, so a lot of people are surprised by the fact that actually it seems that there's progress and there hasn't really been a major hurdle yet. So do you discount it at something that will get done in time without a major cliffhanger?
Well, I care about the impact on markets. And if you think about kind of the periods leading up to where we are now, risk assets were not really properly reflecting kind of the risks and uncertainties around that ceiling. And now we're seeing this rally, which gives me questions about how sustainable it can be, right? So I do think that in terms of the precise date, it's impossible to predict, but over the course of next few weeks, the focus is going to shift away from that ceiling to the fundamental picture of the U.S. economy, which is still characterized by somewhat persistent inflation, as well as growth starting to show signs of weakness. And then that's what we care about when it comes to asset allocation.
Wei Li, what do you make of the comments then we're getting from various Fed officials? There is this mixed picture. Jay Powell has managed to corral Fed officials in a unified message. It seems up until now you're getting these divisions coming to the fore, and the market's now pricing in, as we mentioned, a 40% chance of a hike in June. Do you align with that? And the markets, is that move rational? Do you expect a hike to come through from June? And what do you make of the mixed commentary from Fed officials?
Well, I don't know if we're going to have a hike in June. Our base case is perhaps not, but it's a low conviction base case. But I do know that we're not going to get a cut in July, right? So I think I have a greater conviction pushing against rate cuts being priced in for this year. And then with regards to June, I think it's 40-60, 50-50. Right now, we don't think they will go ahead, but chances are they could, given persistent inflation. But more importantly, I think they will just really try to stay close to peak rates for a lot longer than markets appreciate in order to bring down inflation, which is currently still very persistent, even in the service part of the mix.
So, and this is an interesting conversation, of course, which we keep on trying to find, is if the Fed, you know, thinks that the market is mispricing rate cuts by the end of the year, how do they push back against it? So do they hike in July to prove a point, or do they actually talk the market into saying, like, look, we're just focused on inflation?
I think they have been quite consistent in saying that they are not going to cut this year, right? So if you look at the latest forecast from them, they are forecasting a recession by the end of this year. They are forecasting inflation finishing this year closer to 4% rather than 3%. And at the same time, they are telling us that they are not going to cut. I think instead of making a point in June, which they may or may not do, they would just consistently come out and say that we're not going to cut and you have to listen to us.
Wei Li, I just want to throw to a sot. We were speaking to Grace Peters over at JP Morgan's private bank earlier this week, and she said and made the case and outlined her views as to why we will be getting cuts. It's their view, you're going to get 2 cuts this year. Take a listen.
We've got 2 cuts penciled in. The market's at 3, so you know we could see a little bit of movement there. But we do agree that the economy is weakening, as I mentioned before. You know, a US recession is our base case, and we should get evidence of that as we go through, you know, the 3rd and 4th quarter.
So the economy is weakening. The Fed ultimately will blink. Look, we heard from Paul Donovan over at UBS as well. He says he does see disinflation now in areas of the US economy. You've pushed back a little bit on this view already, but just explain to us why that view around 2 cuts, why you think they're misreading this, the likes of JP Morgan, on this call.
I think the focus is really around our rate of inflation, right? So inflation is coming down from high single digit to mid single digit. And so far that lag has been somewhat smooth, but going from there to target will be a lot harder. We have seen softness in service, core service part of inflation, but not quite where we want it to be. And if you look at, for example, University of Michigan consumer sentiment expectation for inflation is actually coming in a lot higher, which actually does not bode very well for service inflation to come down. And what is also very important is that actually goods inflation is starting to trend up again, right? So I think we're definitely not out of the woods in terms of fighting inflation. And the difference in terms of this cycle versus previous cycle is that we have an inflation problem and previously we didn't. So applying the old recession playbook this time round and expecting the Fed to be able to come to the rescue of the economy is the old regime, but we're in a new regime.
But wait, does it all depend on the credit crunch? So if we have a credit crunch and actually the consumer falling off the cliffs, and they may not have any option than cut.
That's a great point, because if we do have a very severe slowdown, which we don't expect currently as our base case, by way of the credit tightening turning into a significant kind of credit freeze and credit crunch, or another black swan event that could come from any parts of the economy, then maybe the Fed will have to cut. But we're talking about quite a bit worse from where we are on track towards, which is why our base case is that no cut for this year.
Okay, Wei Li's staying with us, very pleased to say, of course, from BlackRock, BlackRock's Global Chief Investment Strategist. More calls from Wei Li just in the next couple of minutes. And coming up, could China's economy be caught in a confidence trap? That's as its post-COVID recovery loses steam. We'll get into the details next. This is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open. Happy Friday. 13 minutes into the European trading day. Debt ceiling optimism lifting the European stocks after the strong handover from the US. The rally in the S&P at the highest level in about 9 months. So looking past the downbeat views around Chinese tech on the back of Alibaba. By the way, that stock now dropping around 6% after a miss in terms of earnings. But the equity markets here in Europe, again, gains of 0.4%. Futures in the US also pointing marginally higher, just marginally higher. Top of your list across these sectors, financial services. A couple of individual stocks to bring to your attention in terms of some of the movers. Smith Group's coming through with some earnings. Just in terms of the numbers, in terms of the full year, they're looking at revenue, organic revenue of about 10% in terms of the growth there coming through for that stock. A little bit of a lift to Smith's Group, up 1.3%. It's a very different story for Titan, though. This is a building materials maker listed here in the UK, tumbling a little over 10% after reporting a fiscal first half loss. So just a couple of individual names. Let's bring back Wei Li from BlackRock now, Global Chief Investment Strategist. Wei, let's start on the China story then. The yen crossing to below 7, the yuan, I should say. The yen is also a story for us today on the back of strong inflation out of Japan. But the yuan dropping below 7, the concerns about China, the data coming through, Alibaba's sales miss seems to kind of point to the fragility around the consumer there. Do we bet on a policy response, or do we stay on the sidelines of the China story?
Well, at this point, we're going to need a policy response for us to actually achieve the target that we have for growth in China this year, which is above 6%. Tom, as you know, we had been earlier in bringing up our China forecast in terms of growth this year, way above consensus end of last year and beginning of this year. And now the momentum is petering out a little bit, right? And we feel that this is a pivotal moment. They do have policy space, both on the monetary side as well as on the fiscal side. But given their growth forecast for this year to be around 5%, they may choose not to act quickly enough. We always know that the restart from China, economy being locked down to reopening is not going to be a straight line. But right now the momentum is tricky. We're currently still overweight emerging market within that China, but we're paying very close attention on the policy front because our growth target is not going to be achieved if they do not come through with rather forceful easing measures.
The concern, Wei, and we have a great story actually on the Bloomberg terminal, is that this is something of a confidence trap, right, that China could see. So it's not something that you could really do with like a blunt instrument like interest rates or even infrastructure stimulus. So what's the right policy mix for China right now?
Well, they can be very thoughtful and targeted and very nuanced, but if they were to do that and the headline kind of stimulus is not impactful enough, then international investors may not be patient to actually appreciate the nuance and the thoughtfulness, right? So we're looking for a more easing. Otherwise, our growth targets wouldn't be achieved. Especially also in the context of geopolitical fragmentation, international investors increasingly demanding higher return for taking the risk of investing in China. Then more needs to be forthcoming.
Tactically underweight DM still, and yet you've seen returns of about 9% across US equities, returns of about 9% for European equities. Asian equities, though, the MSCI Asia Pacific Index, that year to date is up about 4%. Do you rethink that call about being underweight DM on a tactical basis?
Well, if you look at actually, you talked about US equities returning really handsomely so far this year, but if you take out the top 7 big tech names.
It's very narrow.
It's very narrow. Then it's flat, right? Equal weighted US equity market is basically flat on the year. So it really goes to show there are cracks appearing underneath the surface in the same way that there are cracks appearing underneath the somewhat resilient economic picture. So even more important to number one, be very selective, focus on quality as we think about growth slowing down, but also staying invested given the huge amount of uncertainty and volatility out there. If you miss out one of those daily moves and rebounds, then actually you could really miss out on the accrual returns.
Wait, how many, I mean, if you look at the industries, there are some that will be okay in defending their margins and some where it will be actually impossible. Is that shifting as we also see the cost of living going up?
While companies can only get away with passing through cost of production to end consumers for as long as consumers are happy to pay for that price and for as long as they have that purchasing power. Our expectation is that the savings buffer for consumers, U.S. consumers included, are likely going to be exhausted towards the second half of this year. And when that happens, it's going to be even greater differentiation within the sectors themselves, because only the leading sectors, the leading companies, the companies with pricing power are able to do that. So we're talking about being very differentiated on the sector front, but also within sector itself. So the time for selectivity is really now.
Wei, thank you so much, as always, for joining us. Wei Li there, BlackRock Global Chief Investment Strategist. Now let's get straight to the Bloomberg Business Flash. Here's Sarah Halls. Hi, Sarah.
Hi, Fran. Disney is closing a luxury hotel in Florida amid a high-profile fight with Republican Governor Ron DeSantis. The company is also ditching plans to relocate 2,000 staff from California to a new $800 million campus it was building in the state. Bloomberg has learned that Britain is close to winning a major battery plant for electric vehicles. Tata Group, the Indian parent of Jaguar Land Rover, is said to be leaning towards choosing it over Spain. The plant would make batteries for the company's planned range of fully electric models that are due from 2024. The Times reports the government offered JLR £500 million to locate in the UK. A group of TikTok creators and users are suing Montana after it became the first US state to ban the short video app. The lawsuit says the ban, signed this week, violates First Amendment rights to free speech. The plaintiffs include users who earn income from the platform, who say they've made life decisions based on it. ChatGPT is coming to smartphones for the first time with the release of an iPhone version of the AI tool. The software has been released in the US with plans for more countries in the coming weeks. The app allows users to ask questions to the chatbot through typing or speaking. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Sarah Halls, and this is Bloomberg. Francine, Tom?
Sarah Halls in Dubai, thank you. Coming up, G7 leaders consider tighter sanctions on Russia. That's as they meet in Japan. We are, of course, live in Hiroshima. We bring you the latest. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
Welcome back to the Open, everyone. 23 minutes into the European trading day. What can we say about these markets? There is optimism that the debt ceiling won't turn ugly and that they'll find an agreement. Certainly, we've had positive signs on both sides of the aisle. President Biden then flying back and cutting short, of course, his trip to Asia. European stocks gaining some 0.4%. That's really led by some of the basic resources. Now, Bloomberg has learned that the G7 will increase pressure on Russia with extra sanctions and restrictions on goods. That's as Ukrainian President Volodymyr Zelensky is said to be joining world leaders at the G7 in Hiroshima. Let's bring in Bloomberg's chief North Asia correspondent, Stephen Engel, in Hiroshima. Stephen, you're also at a pretty special place, which I know you'll tell us a little bit about, but what are the G7's next steps when it comes to sanctions?
Well, it's no coincidence that this G7 meeting hosted by Japan is being held in Hiroshima, referred to as the Peace City. Obviously, this is the atomic bomb dome. This was the epicenter of that first atomic bomb attack back in 1945, 78 years ago. And the G7 is trying to send that message, when we have periodic threats of possible use of nuclear weapons by Vladimir Putin in Ukraine. So they want to hammer home that point. And they also want to hammer home the unity that the G7 has in trying to contain the war machine of Russia. Yes, the Russian economy has suffered through these sanctions from the West. However, the war machine marches on, and they want to close off some of those loopholes that the Russians have been able to use to evade those first rounds of sanctions. And also they want to tighten or make another round, perhaps, of sanctions, including one that there was, we got news of this morning about possibly tracking the gem trade, the lucrative gem trade exports out of Russia, including diamonds, highly lucrative for Moscow. But some in Europe, including the Belgians, have been opposed to that simply because if they cut off those exports, a lot of them go through Belgium. If they cut them off, they'll simply go to other jurisdictions. So at least the G7 is saying they're going to track cross-border Russian gem trade, and then perhaps that is a precursor to an all-out ban later on. The UK also unilaterally announced that they're going to ban imports of Russian nickel. So there's a number of different moves. But behind the scenes, in the conference centers where the G7 leaders are meeting, they are talking about the various measures that they can take to, really punish Moscow for its continued war in Ukraine. And yes, we are learning from sources that Zelensky of Ukraine will be coming here on Sunday after a stop in Saudi Arabia for the Arab League summit. He could potentially there be in the same room as Syria's Assad. That would be interesting, to say the least, this weekend. But again, he will be here at the Atomic Bomb Dome and the Peace Memorial Park just down the river here to make his case to get the G7s perhaps give more aid for Ukraine's fight against Russia.
Yeah, really fascinating that Zelensky is going to be there in person, again, according to Bloomberg reporting, after we had expected a virtual attendance by, of course, the leader of Ukraine. So that's going to be really interesting to watch. Fantastic stuff on the ground for us. Stephen Engel in that historic location, of course, in Hiroshima. And Steve will be across all things G7 over the next couple of days. Coming up, oil is set for its best week since mid-April on US debt deal optimism. We're going to bring you the latest on the commodity space and some really important analysis from Bank of America. Stay with us. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep rate while up. This is a 3.
As the economic picture does.
The BOK is getting ready to make.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. President Biden urges on his negotiating team as House Speaker McCarthy signals a debt ceiling deal could be struck this weekend. European stocks and U.S. futures are up. Well, G7 leaders are meeting in Japan as they weigh more curbs on Russia. Sources tell Bloomberg Volodymyr Zelensky will attend. We're live in Hiroshima. Plus, the Fed officials sound increasingly split over policy at next month's meeting, prompting traders to lift bet for a hike. I think we heard from Lori Logan really throwing a curveball, actually, on what inflation's expected to
Indeed, and we saw the yields move higher on that 4.2 at the front end on the US 2-year, on the back of the comments from the Dallas Fed president, suggesting that she is in no way positioned for a pause come June. So that certainly saw a market reaction. Of course, the debt ceiling debate, the mood music, the positive sentiment coming from both sides that a deal is close. Of course, there is still some work to be done there, but that optimism lifting the S&P to 9-month highs, the Nasdaq also ending higher, and the optimism remains in the European session, pushing past the downside that we're seeing in Hong Kong, particularly on the tech side of things, where you've seen losses of about 2%. Here in Europe, gains of 0.4%, the DAX adding 55 points. The FTSE 100 benefiting from a lift in terms of copper and oil, even as iron ore is down in the session. The FTSE 100 up 0.3%. Across the sectors then, at the top of the list, financial services gaining a 1.3%. Basic resources tying into that copper and oil story, getting 1.3%. Two sectors in the red this Friday morning. Then telecoms down 0.3%, and personal care currently just off by about 0.1%. Fran.
Now, Tom, oil heading for its first weekly advance in more than a month on optimism that the U.S. will avert a debt default. Joining us for more is Bank of America Global Research, Head of Global Commodities and Derivatives Research, Francisco Blant. Francisco, as always, it's so good, actually, to have you in London. So welcome to our lovely London studio. We had the IEA report just 2 days ago, and it was very clear that, look, that they're expecting stronger demand overall, or stronger oil market because of demand growth. But because of the weakness that we've seen, how strong do you think that demand will be?
So this is, I think, a very important question heading into the second half of the year. We've seen OPEC taking supply out of the market 3 times now. Yeah. September last year, October, and then more recently in early April. And part of it, I think, is just the demand momentum has been slowing down. We've seen slower growth in the developed economies because of the higher interest rates, but also the China reopening hasn't been quite as, let's say, fast and furious as we initially anticipated. And part of it, I think, is the I think the Chinese leadership, the Chinese Communist Party, is afraid of what they saw here and what they saw in the U.S. Double-digit inflation for China, given its setup, would be potentially quite dangerous, right? So I think the reopening is proceeding with a lot more caution there than we all thought, and that's where the demand story might be a little weaker. And then on top of that, you have an industrial recession, right? We've had very weak industry, even though services are really top of the line. So we've seen strong growth in leisure, hospitality, healthcare, education. So all the services are really booming, but it's just industry is also weak. So those are the 2 points, I think, where oil has really failed to turn around and get stronger.
Yeah, certainly that split picture in Europe has come through, hasn't it, in terms of services versus manufacturing, services doing very well. And again, on the China story, the argument that you're not going to get the kind of stimulus that we've seen in the past, 2008, 2009 from China, it is going to be a domestic revival that they're looking for. You're $80 a barrel, that's the target from you and the team at Bank of America by year end. But looking through to 2024, you get to $90 a barrel. What gets you there?
Well, we think we're going to have a deficit in the second half of the year, to be clear. So throughout the second half of the year, we'll start to see prices heading higher. $80 a barrel is an average. We think, so far we've averaged about 82 or so. This quarter is going to be a little weaker, mid-70s, and then we'll get back above 80 in the second half, towards 90, because the deficit is going to get deeper over the course of the next 6-9 months. And it's going to get deeper because, first of all, OPEC wants it higher, right? They've been cutting production to achieve their own government spending targets. We've also not seen the supply response that we've had in previous occasions from U.S. shale. U.S. shale is not as price sensitive as it used to be. And then, as I said, I think demand will eventually turn around and get a little better in the developed markets. So I think those three things start to push inventories lower again into the year end and into 2024, and that's what gets you higher in terms of prices. And then, of course, remember, there is an issue of levels. We've had so much inflation that $80, $90 oil ain't what it used to be after a couple of years of near double-digit inflation.
Francisco, is that on the assumption that actually when OPEC Plus members meet in June that they'll cut again, or status quo?
We have a 500,000 barrel a day cut into our balances into the second half of the year. It may happen in June, it may happen a little later, but certainly we think OPEC is likely to take more barrels out of the market to keep things tight. I think one key objective for OPEC is to bring inventories lower into the second half of the year, because they're almost worried about the risk of higher rates triggering a recession, the banking crisis triggering a recession, and finding themselves in a position where inventories are very high. So they want to, if there is a recession, they want to start from a lower level of inventories. The good news is that because they have more spare capacity, $100+ barrel spike, right, is less likely. Now, we might still get to 100, but I think OPEC's got a little more room to maneuver if prices were to get to 110, 120, and they can bring that lower.
Is there a price that incentivizes a tick up in China demand?
I think we're kind of seeing it already. I think these prices are good for China. Now, gas, which is obviously another very important commodity, we've gone from a high point of 350 euros a megawatt hour on TTF, the European benchmark, all the way down to 29 yesterday. So again, gas is down 90%, oil is down 50%. I think these price levels are attractive for China. But like I said, the more important thing is that I think the Chinese leadership is worried about this inflation contagion, if you like. So far we've seen no signs of it. And to me, that's kind of what they're probably focused on. They want to get people back to work. They want to get the economy going. They want to get stimulus in there. And we're seeing, for example, grid spending supporting copper prices to some extent. But I think they're fearful of just reigniting that inflation situation.
Francisco, do you have any insight actually on what happens to Russian oil? So I know there's a steep price discount, and we're trying to follow the routes of where it goes. And there's, of course, concern that it gets sold to some countries that then resell it back to Russia to Europe with another round of G7 sanctions. Does it put an end to that, or what's the dynamic there?
Well, I mean, I think, again, last year, the European governments agreed to block off as much Russian energy exports as possible, oil and, of course, coal, which also was banned. But I do think that the U.S. was very keen to make sure that Russian oil kept flowing, but just that the Russian discount stayed wide or kept widening. Right. And in that regard, I think the price cap, and I was somewhat skeptical that it would work, it's actually worked very well. It's enticed Russia to keep exporting as much as possible. We've seen Russian exports continue to grow, but the discount has grown also. And this very week, we saw the Russian finance minister talk about how much revenue loss there has been. So remember, we have different political objectives. Political objective number one was to make sure inflation came down. And that we managed to do by not creating a big spike in oil prices through sanctions on Russian oil. Objective number two was to bring down Russian revenues. So those two objectives have been met. So I think the G7 will probably pat themselves in the back a little bit because it's been more successful than most of us thought.
You touched on the price action around gas, the fact that we're 90% down from those August highs.
Yeah.
Does that remain at the kind of subdued levels as we head into the winter, or should we brace for another shock in gas?
Well, I think we are definitely not out of the woods yet. I mean, part of the reason we're coming down is because inventories are high, and that high level of inventories will probably persist into October. But then once we get to the winter season, Tom, we start from zero again. So it could be the case that if we have a very cold winter, and we don't know what winter we're going to get, gas spikes again, yes. So we think gas probably, European gas stays low for a bit, but we think eventually we revert back to 40 euros a megawatt hour on average. And then US gas, we think, is bottoming out. US gas has been already coming down to $2.30, $2.40 per MMBTU dollars. And we think that starts to pick up already because we are seeing the supply response. Producers in the US are taking down rigs, and that will, I think, lead to a recovery in the cheapest gas in the world, which is US gas. And then eventually European gas will also revert. We still have a big gap by not having those Russian volumes coming in.
I mean, there's also, last year we had abnormal heat, we had drought that affected some of the hydropower, it definitely affected some of nuclear plants as well.
Right.
When do you look at renewables as being able to supplant that? And, given all these dynamics, has basically the gas market found a floor at 30 euros?
It's always hard to call a floor on gas. It's really one of the most volatile commodities out there, and certainly European gas is really liquid gas because it depends on LNG. So that makes it even more volatile. A gas that is liquid is probably the most volatile commodity outside power, which cannot be stored. So, the real issue, I think, with renewables, over time, what's going to happen is we're going to build more and more wind and solar, and our need to draw on gas will decline. So, and this is going to be true for the U.S. as well, for generally the world, right? But because we don't really have the ability to store power on an industrial scale, we'll still need gas for peaking purposes. When the sun ain't shining or the wind ain't blowing, we're going to need those gas peaking units. But I think renewables and wind will just keep going this way. So over time, less and less gas, but there'll be moments, there'll be pockets where we just need all that gas all at once. And that's what's going to create the volatility. But I think Europe probably within 5 years will be in much better shape. Unfortunately, we have still 2-3 winters where things could be a little rocky, and we may have to ration demand.
Okay.
All right.
Francisco, very, very fortunate to have you in the studio this morning to break down this story for us around, of course, oil and gas and the prospects. $80 a barrel by the year end, maybe $90 in 2024 is an inventory question, and then the views on gas maybe getting back to 40 here in Europe. Francisco Blanch, Bank of America's Merrill Lynch, of course, head of global commodities research. A couple of lines crossing from the Bank of Japan governor as well, Ueda, on the back of that stronger inflation print. It was in line with expectations, but again, just shows that there is inflation in Japan. It's modest compared to what we're seeing in Europe and the US, but it does call into question, of course, yield curve control. A couple of lines then from Ueda saying that the BOJ will continue easing with yield curve control. They see inflation slowing back to below 2% towards the middle of the full year of 2023, but saying, Ueda, that uncertainties surrounding the price outlook are extremely high. Just briefly checking the yen for you, 138, a bit of strength coming through for the Japanese currency. 0.5% is the gain so far in the session. Coming up, the pharmaceutical industry is betting on AI to help drive down the time and money it takes to develop a new drug. We're going to speak to James Field, CEO and founder of Lab Genius, a really fascinating company. That is coming up. This is Bloomberg.
what do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
I think it's an important conversation. I think there's always need for a regulation in technology like there is in any industry. And, we work very closely with regulators all over the world to make sure that we're sharing the views of, where the technology is going, then we're working with them on it. But it's a challenge. I think it is a challenge.
Meta's Global Business Group head, Nicola Mendelsohn, on regulation technology. She spoke to us at a Bloomberg New event, Voices event, geared towards amplifying the voices of women and other underrepresented experts. And it also comes on the back of the Facebook owner unveiling a slew of new technologies, including a new chip developed in-house to help transfer AI faster and actually look at some of the things to keep them safe.
Yeah, really important voice, of course, in the world of technology, but also on the question of AI and its implications. Another important voice coming up as well now. A new drug typically takes about $3 billion and more than a decade to discover and develop. And 90% of experimental medicines fail in the process. AI, though, and machine learning algorithms could slash those costs and timeframes by sorting through and evaluating candidate treatments. Here in the UK, Lab Genius is using this technology to develop a new way to search antibodies to help combat diseases. Let's bring in then James Field, founder and CEO of next generation antibody discovery company, Lab Genius, based here in the UK capital. James, thanks for coming into the studio. Look, a big reason for getting you on is because there is a lot of hype around AI, around ChatGPT, around Google's Bard. There's a lot of money flowing into the sector now. You guys have been working on this for a number of years, and you're in the world of drug discovery. And a lot of guests that come on talk to us about the implications for healthcare. Talk to us about what you do and what you do that's different, what you do that GSK and AstraZeneca and Pfizer are not doing.
Thanks very much for having me on the show. It's an incredible time in the world of drug discovery at the moment. We're transitioning from this world in which to discover new molecules, you had to have an insight into their mechanism to understand the science that underpins that molecule. But the transition that's changing now is to a world in which it's all about how much data you can generate, how you can crunch that data and drive new insight. And Lab Genius is all around how do you combine the very best of human and machine intelligence to generate new therapeutic molecules. So what that practically means is that we have a capability that we built out in an old industrial factory here in London that is able to generate a lot of high-quality machine learning grade data. We use that data in conjunction with machine learning to drive novel biological insights around how molecules might work, and then use that to ultimately find novel high-performing molecules.
And so, James, we had an extended conversation with DeepMind. This is basically, it's almost like what they do, right? Protein folding, and for example, DeepMind then also gives this technology to other companies to advance, right? Some of the research, it would take human 10 years. This takes maybe 2 years. But does it change the way that then it's peer reviewed? Does it change the way that actually these things then can get to market?
We're really lucky in the sense that from a regulatory perspective, we have the FDA, the EMA, the MHRA, et cetera. All of those regulatory agencies have a really high bar, and they need to understand how these molecules work, exactly that they're safe, efficacious, et cetera. And so all of that regulatory infrastructure is already in place. Any of these molecules that come through these processes still have to undergo that rigorous testing.
When it comes to the data question, you touched on this. Are you using, is it your own data? Is it public data? Because there's a lot of scrutiny around this and the ethics of data use.
It's a great question. I think that the most interesting scientific questions are going to be answered by the data that's yet to be generated, the proprietary data sets that ask very specific questions where you can't necessarily access that data on the web. So at LabGenius, we generate biologically relevant, disease-relevant data that's pertinent to very specific diseases. And we use that data to understand how these molecules work. So it's all our own high-quality ML-grade data that we generate.
What can AI used in health and I guess research breakthrough, like how fast can this really solve some of the world's big problems?
Well, what we're seeing through our own work at LabGenius is that we can take problems that would seem intractable and create solutions that as humans you may have even argued against. So really it's a 0 to 1 phenomenon here. And I think the reason that that's so impactful for the world of drug discovery is because, as Tom said at the beginning, 95% of these molecules fail. And if we can alter that probability of success of getting these molecules to approved therapies, then that's going to have a huge societal impact.
Have you had, what breakthroughs have you had or discoveries have you had that you can tell us about now and the pipeline for LabGenius?
Absolutely. So we set up our system and we asked it the question, can we discover a new molecule that is able to differentiate between healthy cells and cancer cells? So we took a clinical benchmark. So that's a molecule that's been made using conventional methods by a pharma company. We ran our ML-driven process, and what we ended up with was a molecule that was 400 times better than that clinical molecule in terms of differentiating between healthy and diseased cells. We're now taking that capability and applying that to a whole number of different potential therapies.
Does that mean that you are also sharing some of the technology? Again, if we go back to AlphaFold and some of, I mean, the idea is that actually you have a big database that everyone can use so that you can peer review it, even if you're using AI. How much sharing is there amongst, your industry?
So there's a huge amount of sharing that goes on, but for the work at LabGenius, because of a lot of the value is locked up in this proprietary data that we generate on site, this experimental data, that's where a lot of the value of the company sits. And so it's our ability to generate that data, and that's proprietary in-house.
James, just very briefly before we let you go, the Chancellor of the Exchequer has said he wants to create and turn the UK into a biotech superpower. Is that realistic?
I think the UK is actually really poised to take advantage in this revolution in AI. Take a city like London by way of example. We have incredible expertise in the world of synthetic biology. We've got expertise in machine learning, but also we've got the capital here now to drive a lot of that innovation into really exciting startup companies.
James, thank you so much for joining us. James Fielder, founder and chief executive of LabGenius. So now we'll have plenty more on the markets. We'll really look at some of the policy shifts that we've seen from certain FOMC officials, maybe a bit of a curveball from the governor from Dallas. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
Welcome back to the Open. Happy Friday. Seeing optimism across these European equity markets, picking up from the gains that we saw on Wall Street, gaining 0.5% across European stocks, pushing higher in the 55 minutes of the Open. Top of the list, financial services in terms of your sectors. Yes, there is a little bit of confidence coming through on the debt ceiling debate and looking past the curveball thrown into the mix around Fed pricing from Laurie Logan of the Dallas. Of course, you did see moves higher at the front end of those two-year yields yesterday, currently above 4.2. Let's take a look at some of the key things markets are watching out for today. The G7 summit, of course, continues in Hiroshima today. The focus is expected to be on the war in Ukraine, China and the US debt ceiling. At 1:30 p.m. UK time, we're going to get the March reading of the Canadian retail sales. Economists surveyed by Bloomberg see sales contracting by 1.4% on the month. And at about 3 p.m. UK time, ECB board member Isabel Schnabel will give a speech at the Conference on Financial Stability and Monetary Policy in London. And at 4 p.m. London time, Fed Chair Jerome Powell and former Chair Ben Bernanke will be attending a monetary policy research panel in Washington.
Now, Tom, let's look at the market, certainly what they did yesterday, but I would put it into a broader piece, and I'd really point to John Authers with a brilliant column this morning talking about, look, the world-changing narrative around AI has really hooked up the Fed's determination to provide liquidity, even during a rate-raising cycle, and so that changes actually the game for a lot of these equities. I mean, he has some great charts looking at the earnings forecast, meaning that they're up, but only because they'd previously fallen so severely, but also the equity to bonds relationship has changed in the last couple of years. So have a look at that. Look at the markets and the NASDAQ breaking fresh through that 52-week high. That's it for the European Market Open. Surveillance Early Edition is up next.
race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability. You know, and we have differences. You know, we're capitalists, they're not. You know, and it's okay. We could sort that out, but we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority. The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. President Biden urges on his negotiating team as House Speaker McCarthy signals a debt ceiling deal could be struck this weekend. Stock futures in the U.S. are higher. G7 leaders are meeting in Japan as they weigh more curbs on Russia. Sources tell Bloomberg Volodymyr Zelensky will attend. We're live in Hiroshima. Plus, Fed officials sound increasingly split over policy at next month's meeting, prompting traders to lift bets for a hike. So we have a packed show looking at the busy week that we've had, but first thing is first, let's also check on the markets. This is the picture for European stocks. We did also have a rally in the NASDAQ yesterday, certainly above that 52 moving average, weekly moving average. European stocks gaining 0.5%. The thinking there is, of course, if we don't have some kind of debt ceiling overhang, or certainly not a cliffhanger, then stocks are poised to make more modest gains, as there was a little bit of profit taking ahead of something ugly happening in the U.S. I'm looking at mining, financial services really leading gains in Europe. Most sectors in the regional benchmark trading higher. And then the picture is also dollar strength, a little bit lower than it was just 20 minutes ago. And the Brent crude, we had a good conversation with the head of commodities at Bank of America. Brent, 76.39. Now, there's not huge regional difference when you look at Europe as a whole, because, of course, a lot of this is only on margin calls and, or actually margin profit in some of the earnings, some of the big earnings that we saw in the U.S. And so that's really filtering through quite equally to some of the indices. You can see the FTSE gaining 0.3%, the DAX 0.5% higher. Now, President Biden and House Speaker Kevin McCarthy have indicated a debt limit deal could be reached as soon as this weekend. Now, the optimistic tone from both sides has raised hopes that Congress will act in time to avoid a U.S. default. So let's now get straight to our Bloomberg senior editor. He's Bill Ferries. Bill, first of all, how optimistic should the markets be at this point, given that, what we're hearing from President Biden and Kevin McCarthy?
Well, the tone of the talks has definitely improved. Both sides saying that some sort of an agreement could come, or at least the outlines of an agreement could be reached by the end of this weekend. That would give negotiators time to hammer out a lot of the details that still have to be worked out before as early as the June 1st ex-date, when the U.S. is scheduled to hit that debt ceiling.
So is there, Bill, honestly, in politics, anything could derail the agreement, but is there any big hurdle that you're worried about?
Well, yeah, you don't have a deal until you have a deal, and there's still going to be a lot of the details that have to get worked out. I think we're going to look very carefully at how some of those Republicans to the right of Kevin McCarthy, several of whom have never voted to raise the debt ceiling in their entire political careers, how they feel about the agreement. And also, President Biden is getting some flack from progressives on his left who are very concerned that he's going to negotiate away too much of what they've considered to be non-negotiable issues, such as work requirements for people on government aid. So those kind of things could start to pull the center apart a little bit. We need to see the details of what the final agreement is.
I was going to ask you, what does the final agreement look like?
Well, so, you know, the big question, I think, will be how far down the road do these sides kick the can in terms of the debt ceiling? When will the next debt ceiling limit be? When Republicans first offered to enter talks, they proposed a debt ceiling increase that would last about a year. That, of course, would take those negotiations right into the middle of the presidential campaigning season. And it gets a lot harder to reach an agreement when both parties are trying to stake out of a position. So that's the big thing that we still don't know. How much will they raise it by, and how long will that last?
Bill, as always, thank you so much for joining us. Bill Ferry's there on the debt ceiling. Now, we're also joined by Dana El-Battaj, Bloomberg's managing editor for credit in EMEA. Dana, thank you for joining us. You always make us smarter on credit, and there's, of course, a direct link. If you're a company and you need to issue some of the debt, do you look at the debt ceiling and say, look, I'm going to do it now, just in case?
Absolutely. I mean, usually, whenever you want to price debt, you want to make sure that there isn't that much volatility out there. So right now, over the last 2 weeks, people have been waiting on a decision. There hasn't been that much bad news out there. So corporates have been hitting the market as hard as they can with as many deals as possible. This is the time to price debt. Once we know that there is a deal, there's going to be some volatility. And after that, you can probably price something, but you don't know when the next big headline is coming. That's why over the last 2 weeks, it's been nonstop in the primary world.
Yeah, of course, you just want to do it with the most favorable conditions possible.
Absolutely.
Talking about favorable conditions, I mean, we heard from Lori Logan, president of the Federal Reserve of Dallas. I mean, she put a bit of a curveball because she was much more hawkish. She's a voting member than what we thought. What does that mean for credit?
Look, there's always going to be ups and downs until we know what's going to happen with inflation going forward. Even if the rate is slowing, it's still well above what the target is. And so for that reason, you will always have hawkish comments like that coming and going. Until there is some certainty over where inflation is headed, it's not a surprise that there is some hawkishness out there.
We're seeing an equity rally, and our John Author has also wrote a brilliant piece explaining it. China putting a little bit of a spanner in the works in all of this. Do we need, I mean, how does that end?
Well, the thing is that if you have the risk of a global recession, the last thing that you want is the world's second biggest economy faltering and its post-COVID rally basically slowing. You don't want that. You want them to want more products. You want them to, you want them to keep the price of oil up and so on and so forth. So I think the issue with China, and the reason why so many people are worried about the recovery in China, is because the reality of an economic recession globally becomes more and more real if the slowdown there really takes hold.
Is there anything else that you're looking at? I mean, some of the dynamics, for example, between equities and credits and how they've, played, and that's really changed the last couple of years. Do we go back to what it was like 5 years ago, or has that dynamic changed forever?
I think right now what we're seeing is an entirely new market, and we are swaying back and forth. And at this time, I think people obviously they want yield. They want to make money, but they want to make money knowing that they're not going to put it in a security that's going to go down because of a default or so on and so forth. So yes, bonds have benefited significantly because of this demand for safe assets. Also, the fact that rates have gone up means that safe bonds are now offering some really interesting yields. So yeah, there are outflows from equities into bonds, but even within the bond world, it has been extremely complicated. Junk bonds are not as sexy as they used to be. Investment grade bonds is where the money is headed, and I think that we will continue to see that.
I mean, I want to do a whole program called "Junk Bonds Are Not as Sexy as They Used to Be." Does it really depend regionally on where a lot of these companies are making their money?
It is very idiosyncratic, and this is the time when an analyst's job is so important. There was a time where you could throw your money at pretty much anything, and you would make money. Now you have to dig deep into the finances.
There you go. A lot of analysts actually having to earning their fees. Dana, thank you so much for joining us. Dana Al-Battaji, they're, of course, our managing editor for Credit. Coming up, G7 leaders consider tighter sanctions on Russia as they meet in Japan. So we'll discuss that next. And this is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
The moment news breaks, no one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
Japan is what I refer to as the supply chain of the supply chain. There are about 18, 19 companies here in Japan that operate 40 to 75 to 80% of market share worldwide in their space. You cannot produce a semiconductor without a Japanese company involved in it, if not multiple companies.
The U.S. ambassador to Japan there, Ram Emanuel, speaking to Bloomberg in Hiroshima as Micron strikes a deal with Japan for financial aid to make chips. Now, Bloomberg has also learned that the G7 will increase pressure on Russia with extra sanctions on restrictions of goods. Now, that's as Ukrainian President Volodymyr Zelensky is set to be joining world leaders at the G7 in Hiroshima. Bloomberg's Rosalind Matheson joins us now. Ros, you're in the bunker. I know that there's like a lot going on. You're basically just writing headlines and trying to break news. So, you know, congratulations to all of the Bloomberg team that have been doing really an outstanding job in covering the G7. When you look at what leaders can do to reinforce some of the sanctions on Russia, is it shadow banking? Like, what can they touch to lock these in?
Well, that really is the fundamental question, because you look at the depth and breadth of the sanctions that have been put on Russia so far, and they're pretty extensive, and yet the Russian economy has remained somewhat resilient, and certainly Vladimir Putin is not being deterred at all with his war in Ukraine. So a big question here is what else can be done? What else can be squeezed that's not already been touched? Of course, a lot of conversation around existing loopholes in those sanctions regimes. A lot of countries have not signed up to the sanctions, so many goods that are going through third countries. And of course, Russia continues to export energy to a lot of other countries around the world. We do know there's going to be a tracking mechanism around Russian diamonds, for example. That's the first step perhaps towards banning what is a very lucrative trade for Russia. We also know there's going to be some tightening of those loopholes, particularly, again, equipment that's going through third countries into Russia. But in terms of sort of the overall ability to squeeze the Russian economy, it really does come down to money. And right now, Russia retains heavy reserves that can sustain for months on the go. So shadow banking even is not going to do anything. Certainly, as long as you've got that money coming in from China, from India, from the Middle East and elsewhere, there's very little that can be done to stop Vladimir Putin in terms of at least his actions on the ground in Ukraine.
Where does this leave us with China? If you're going to hurt Russia, does the G7 need to get closer to China?
Well, certainly what we're expecting here, in fact, is tougher language on China. If anything, that the language they use here is economic coercion, and that's code for what they say are the economic practices, in particular of China. And what we know, there's going to be a broad mechanism here where the G7 nations will agree to coordinate their policies when it comes to China. They can't agree exactly what those policies should be and how tough to go, because, of course, even with all this talk of self-sufficiency, you can see that these nations are still very intertwined economically with China, but certainly the rhetoric seems to be hardening, and the idea you could pull China away from Russia and into their orbit seems to have dissipated entirely. If anything, the China-Russia relationship is only deepening.
Roz, we're also, of course, hearing that the president of Ukraine could be attending the G7. How significant would that be?
Well, it's significant on two grounds. One is, of course, we're in Hiroshima, which there was a nuclear bomb dropped on this city in the dying days of World War II. And that's very poignant for Ukraine also in many ways. The Russian president has threatened to use nuclear weapons on Ukraine. He plans to move some of his arsenal very close next door in Belarus. And of course, there's the memory of Chernobyl, which was a nuclear power plant. But of course, that meltdown that happened decades ago and the impact that had on what is now Ukraine. So, of course, it's very much intertwined into the Ukrainian experience right now. So the pictures of the Ukrainian president standing here in ground zero, essentially, for Hiroshima will be very powerful indeed. And also coming here gives him the chance to engage what's known as the Global South. These are countries outside the Group of Seven. Of course, he's got very firm support from the G7, but what he's looking for is kind of that support from countries like India, Vietnam, Africa, Brazil, and so on. So it's a chance really to meet with those leaders here.
Roz, first of all, how important is this summit for Japan and for the Prime Minister in particular? But also underlying this is everything that's happening with chip makers and the fact that a lot of the G7 countries are trying to find alternative sources to Chinese chips.
Well, we've seen some interesting deals on the sidelines here, particularly in that regard between the UK and Japan. But of course, this is a good moment for the Japanese Prime Minister. His popularity has been rising again after a bit of a dip. Hosting a summit like this is good for his popularity, as was his visit, of course, to Ukraine not that long ago. And as well, it gives him a chance to showcase his ability to negotiate in the region. He's hosting, of course, the South Korean president on the sidelines of this meeting. That's a really important relationship in the region, but one that's been very tense for many years. And so that's going to be important, particularly again for Japan, as they look to ways to contain North Korea, another country that's got a budding nuclear arsenal. So, of course, there's lots of things here for the Japanese Prime Minister where he can say, look, I've hosted this summit and I've brought a bunch of people together, and that's only positive for him.
Roz, thank you so much for all of the insight. Of course, Rosalind Matheson there for us at the G7. You can see that well-established badge that, of course, a lot of our top editors have to wear to get around these big summits. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The UK is committing £1 billion to boosting its domestic chip industry over the next decade, focusing on areas like research and design, where it already has a comparative advantage. The investment is a fraction of what other governments have pledged as they look to reduce reliance on Asia. The US and EU say they plan to spend more than $90 billion between them on this sector. Now, Bloomberg has learned the ECB is stepping up scrutiny of banks' liquidity reserves and may communicate stricter requirements to firms later this year. The ECB's annual review of the risks faced by banks is likely to pay more attention to the management of liquid funds. That comes in the wake of the collapse of Credit Suisse and US lenders, including Silicon Valley Bank. Japan's inflation has re-accelerated after months of cooling, with CPI, excluding fresh food, hitting 3.4% in the year to April. Underlying prices, which also exclude energy, rose at the fastest pace since 1981. The data is likely to move the BOJ closer to policy normalization. And billionaire investor Sam Zell has died. Zell was known for his bets on distressed assets, calling himself the grave dancer. He built a fortune in real estate, but also invested in disparate business, including radio stations, drugstores, parking lots, and mattress makers. He also made a losing bet that drove the parent company of the Chicago Tribune into bankruptcy. Sam Zell was aged 81. Global News, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thanks so much. Coming up, UK telecom bosses cutting thousands of jobs over the coming years. What does this mean for the telecoms industry? We'll discuss that next. And this is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, BT and Vodafone are both heavyweights on the UK's FTSE 100, and both fell on news of major job cuts this week. So where has this earnings season left a wider UK investment case? Well, joining us now to discuss all of this is Tim Craighead. He's Bloomberg Intelligence Senior European Equity Strategist. So, Tim, thank you so much, as always, for joining us. How have earnings fared so far?
So, couple things I would mention on the heels of your telecom comment. I would say I think that's much more of a European affair than it is necessarily a UK affair. And interestingly enough, we did just step up and make Vodafone a focus idea because we think that there is an underappreciated opportunity here for restructuring. But set that aside. On earnings, it's been a really interesting first quarter earnings picture in that broadly across Europe, we've had much better than expected results. 15% earnings growth is now what's recorded for the overall European market. Minus 1% was initially expected. But if you look at what's transpired with revisions going back to the UK, the advantage that the FTSE had last year, which was dramatic, has now almost totally slipped away. Revisions are down a couple of percent year to date in the UK. They're up 4% for the stock 600.
So I'm fascinated by telecoms. So what I don't understand is that if you look at the world's richest men, like 5-10 years ago, it was Draghi, it was Carlos Slim. It's all people that made money in telecoms. Xavier Niel, also the French billionaire. And now it's really tough environment. Like, what's changed? They're splitting off. Is it just because it's so disrupted?
Well, I think part of it is disrupted. Part of it is there's a ton of investment that needs to go in to bring the infrastructure up to speed. And part of it is, it's a very diverse set of companies here in Europe that hasn't consolidated, and unlike, say, in the US, and that makes a difference. Part of the reason why we think this could be interesting over the course of the next 2 years is that finally maybe we get to where we consolidate down to a smaller number of operators that can be profitable.
Okay, and I know there's also sale of Millicom. Okay, we'll talk a lot more about telecom. Talk to me about the investment case for the FTSE. Is there one?
Well, so yes, but.
Yes, but is a no.
Exactly. I mean, I think that there's a mainstream bearish argument right now, politics, lingering Brexit, hocus pocus and whatnot. Set all of that aside. We're not particularly optimistic on the FTSE through this year, unlike where we were last year, because of really composition. We were enthusiastic last year because financial profitability was expanding with rising rates. Energy, which there's a ton of it in the FTSE, was expanding with rising energy prices. And staples and healthcare are really big, and they were defensive. All that turns on its head this year. Net interest margin story is probably now done. You've got energy that's fading. And the staples and healthcare are okay, but they're global, and they're taking pressure from a strong pound. And so a lot of the positives that made the FTSE a haven last year are sort of, they're just not there. We don't see downside. We just don't see the upside.
Tim, thank you so much, as ever, really, for all of your analysis. Tim Craighead, Bloomberg Intelligence Senior European Equity Strategist. Coming up, we'll dive into the U.S. debt ceiling debate with Leslie Vinjer-Murray, Director of the U.S. and America's Program at Chatham House.
What do you like most about your job? I think the people. I mean, ultimately, we're a people business.
a lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Bloomberg.
President Biden urges on his negotiating team as House Speaker McCarthy signals a debt ceiling deal could be struck this weekend, while stock futures are higher. G7 leaders are meeting in Japan as they weigh more curbs on Russia. Sources tell Bloomberg Vladimir Zelensky will attend. Plus, Fed officials sound increasingly split over policy at next month's meeting, prompting traders to lift bets for a hike. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bloomberg has learned that the ECB is stepping up scrutiny of banks' liquidity reserves and may communicate stricter requirements to firms later this year. Let's get more on this Bloomberg scoop with our Nicholas Comfort, our European finance reporter. So how much, Nick, and this is an amazing scoop, how much does this have to do with the banking turmoil, SVB, but also what happened to Credit Suisse?
Yeah, I'd say definitely the ECB scrutiny of liquidity accelerated with the banking turmoil in the US and with Credit Suisse here in Europe. I mean, it's something they've been looking at in some detail since the end of 2021 with inflation. But I mean, they really ramped that up when they saw just how bad it can get for banks. The impact of rising rates can be quite detrimental to banks as well. It's not just the positive in terms of earnings.
So, Nick, what businesses is the ECB likely to be focused on?
Yeah, as we understand it, the areas they'll be looking at most closely sort of in the autumn of this year will be wealth management and also sort of the banks that are exceptionally funded on financial markets, so by bond investors. But also, I mean, we always think of retail being super stable in terms of liquidity, but actually that's one area where supervisors are questioning as well, saying, hey, just how stable is retail? Could we be seeing if depositors lose confidence for some reason in their banks or in the overall system in which they're based in? Should this be an area which we're more focused on as well? Digital technology plays into that as well. People can move money much more quickly these days than they could do in the past.
So are European banks in the same situation as the U.S. firms that went by? I mean, regulation's different, right? And I keep on getting told, look, there's regulation and then there's supervision. Like, are we just in a different boat, or could there be similarities? We know, we also spoke to Jamie Dimon on short sellers 10 days ago.
Yes, good point, Francine. It's really important to differentiate here. First of all, the banks in the U.S., which were, I mean, smaller than JP Morgan, certainly, but still pretty big banks, they weren't subject to the same standards of liquidity regulation as all European banks are. So they didn't have to meet the so-called liquidity coverage ratio, which is very important. And then also beyond that, the ECB says that the euro area banks have less exposure in terms of interest rate risk in the banking book as well. So there are key differences here. But I don't think ECB is willing to run the risk of being asleep at the wheel on this one, and they really want to make sure that in their supervision they are taking account of the risks of rising rates and of tighter monetary policy. Those TLTROs, they're disappearing as well in coming months. So they don't want to lose focus on that.
Nick, thank you so much. Nicholas Comfort, our European finance reporter, there with the very latest on this wonderful, important Bloomberg scoop. Now, there's some cautious optimism in the markets as a deal to raise the U.S. debt ceiling appears to be getting closer. Well, President Biden earlier urged his negotiators to keep pursuing an agreement after House Speaker Kevin McCarthy indicated that a deal may be struck by the weekend. Let's speak to Leslie Vinjer-Murray, Director of the U.S. and Americas program at Chatham House. Leslie, you always make me smarter on U.S. politics, so thank you so much for coming in. I don't know whether we were so downbeat about, politicians in the U.S. being able to agree anything, that this is now a huge surprise that they're dealing with the debt ceiling so quickly. Is the optimism warranted?
I would hate to guess wrong. It certainly looks like they're heading towards a deal. I think for many people who watch this closely, there's been an assumption that this would go to the brink and then be dialed back. But obviously for everybody watching, both at home in the United States, but especially around the world, and the world is watching, this is an extraordinary brinkmanship play, and one that really hurts the credibility and the leadership of the United States. Remember that President Biden is at the G7 in Japan right now and trying to focus on the big global challenges, on the war in Ukraine, on security in the Indo-Pacific, and many other challenges. And, right behind his shoulder, everybody's asking him, are you going to resolve this problem? Because the implications globally would be obviously very, very significant. This is a president also, Francine, who's had to cut his international travel short as a result of the crisis at home.
So, Leslie, what does a deal look like at this point? And is it a deal for, the 1st of June or the 2nd of June or wherever the debt ceiling is, or is it something that could be more substantive?
I think that is the looming question. And first of all, I think that it's likely. It sounds like it's likely that it will go for a vote as early as next week. Obviously, the president, the country, the Democrats would like this to be a deal that extends beyond 2024. The idea that this would be a short-term deal that would drive this conversation right into the midst of an election year is one that I think everybody would like to avoid. And there's a question of, how much the president and the Democrats will concede when it comes to the budget. Some of that unspent COVID money is likely to be one point of concession. But we are going to see a president who's going to have to very skillfully manage all sides of his party. Obviously, the progressives in the Democratic Party are mobilized against this being linked to budget cuts. Pressing for, other measures to be used to resolve the crisis. But I think in the end, we will see some concessions. And it's to everybody's advantage to move out of this space, not least the president, who, again, is in Japan at that G7, has canceled his meeting, his travel to Australia for a meeting of the Quad, canceled a visit to Papua New Guinea, which the country had declared a national holiday. Because the United States president was turning up. I mean, the implications for America's leadership are very significant at a time when this president is really trying to focus very clearly on the Indo-Pacific and on America's leadership role with respect to China.
Leslie, I know you don't have a crystal ball or inside a politician's brain, but you're close to that. So is this because the debt ceiling, right, could really be catastrophic if there's a U.S. default? Or do you see softening on both sides and trying, to, I guess, normalize U.S. politics and finding more of a compromise in general?
I think this is pretty clearly about the debt ceiling and the cost at home to many people who would lose, many people that are critical to both parties' constituencies, obviously to America's global position, to many countries, to the financial system. So I would hesitate to say that this was about trying to find a new normal in American politics at a time when that doesn't seem on the cards. We are about to see probably DeSantis declare that he's running for president as early as next week. the heating up of intense partisan politics that are, as we know, deeply polarized, I don't think is something that's going to change in the near term.
And of course, we're in election cycle. I don't know whether you think DeSantis, or whether it's too soon to say, is going to be the Republican nomination, and whether actually it seems that China bashing from all sides is going to be the thing that will harden as we get close to the presidential election in the U.S.
You know, on the candidate question, it is very difficult to say, because of course it depends on many things. What happens with Donald Trump and the various cases that he's dealing with. In the short term, he's had a bump. That's partly, I think, why DeSantis has waited. But there are multiple candidates, and so there's a big question about whether those votes get divided on the Republican side, and that could help former President Donald Trump, as we know. But on your very important question about China policy and whether there's what we might call an outbidding to see who can be tougher on China, that seems to be the case, certainly in the Congress, but we've seen from the White House and in general in the last few weeks a real effort to moderate the language that's coming out of the United States about its approach to China, to try and find some point of diplomatic engagement, to talk about de-risking, not decoupling, to stress the need to have a productive relationship. That's going to be a harder line to hold to as we get more fully into that election year. But again, we are seeing many people come out in favor of a more careful and moderated approach that is attentive to the national security risks of economic engagement, certainly on technology, on artificial intelligence, but that really seeks to dial down some of the tensions.
Yeah, Leslie, thank you so much for some really important conversations on China. Of course, so some of the curbs on technology would be on top of the Trump-era tariffs on Chinese imports, which, frankly, President Biden has largely kept in place. Leslie Vinter-Murray there, Director of the U.S. and the Americas Program at Chatham House. Coming up, why Japan's streaming addiction is posing problems for the yen. This is an important conversation. We'll bring you that story next, and this is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
On the AI side, we created a number of years ago what we call a responsible AI division, where we're bringing in experts internally, but also bringing in experts from external as well, to be able to work, to kind of look around the corners and think about what are some of the challenges that will come up? What are some of the areas that we need to think about and we need to bake in? So yes, that's a really important part of the company and the roles that we have.
What are the pitfalls coming up in AI? Because we try and read as much as we can, but actually if you're not in it, it's extremely difficult to see what our lives could be like in 5 years with AI.
Yeah, so look, we are going through another moment in technology that I find very exciting. You know, you get one of these every, few years. And what we're seeing now is really going to change again how we live, how we work, how we come together, and the skills that people are going to be able to have. From a meta perspective, there's kind of 3 key ways that we're using. And we've really been using AI since the earliest days of newsfeed back in 2006. So we use it to bring to the top the things that you want to see from your family, your friends, the brands, etc. We also use it, the large machine learning models, to be able to take down the bad content, the misinformation, we get it out. And then we also use it from an advertising perspective as well, to be able to connect the advertiser with the right person that they want to be able to reach. And now we've just started to talk about some of the things that we're going to do and the ability now to actually create advertising or changing. So say I'm a florist selling these flowers, very nice backdrop in this picture, but maybe I'd like to see a green background, a blue background, a red background. You can do that now. Maybe you want to change the nature of the shot. This shot was taken like this. Want to pull it out to be able to use reels. We'll now be, start to be able to do those sorts of things. So still really early days, but it's very exciting where this is going.
What do you worry about? I mean, of course, we all talk about, fake news, fake pictures, and so far, you can tell actually the difference, right? The Pope with a puffer jacket was something that people went, and then after 15 minutes, maybe saying, no, that's probably not true. But as this gets more sophisticated, it'll get harder.
Yeah, so one of the things that we're thinking about is very much around, there's conversations around IP, where that resides. There's conversations around the labeling. So those are the sorts of things that we're bringing into the company that we're thinking about now and we're trying to get ahead of, and also making sure that we're taking things and we're training the models now where we do see something that is, for example, a piece of misinformation, that we can label it, take a digital fingerprint of it, and then be able to take it down off the platform. So that we're actively making sure that we're looking at these sorts of things.
Meta's Global Business Group head, Nicola Mendelsohn, speaking exclusively to us at Bloomberg's New Voices London event. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Disney is closing a luxury hotel in Florida amid a high-profile fight with Republican Governor Ron DeSantis. The company is also ditching plans to relocate 2,000 staff from California to a new $800 million campus it was building in the state. Now, Bloomberg has learned that Britain is close to winning a major battery plant for electric vehicles. Tata Group, the Indian parent company of Jaguar Land Rover, is said to be leaning towards choosing it over Spain. The plant would make batteries for the company's planned range of fully electric models that are due from 2024. The Times reports the government offered Jaguar Land Rover £500 million to locate here in the UK. A group of TikTok creators are suing Montana after it became the first US state to ban the short video app. The lawsuit says the ban, signed this week, violates First Amendment rights to free speech. The plaintiffs include users who earn income from the platform, who say they've made life decisions based on it. And ChatGPT is coming to smartphones for the first time with the release of an iPhone version of the AI tool. The software has been released in the US with plans for more countries in the coming weeks. The app allows users to ask questions to the chatbot through typing or even speaking. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, Japan's streaming addiction is turning into a structural drag on the yen. That's according to analysts at Barclays. They say the rising flow of Japanese money overseas to pay for services like Netflix and Amazon is knocking the currency. Let's bring in Bloomberg's Paul Dobson with the very latest. Paul, this story is fascinating, right? So why is Japan's so-called digital deficit a problem for the currency, the yen?
Yeah, so fun one for a Friday, Francine. the Barclays guys have been looking into Japan's current account and figuring out that actually it has this really big kind of deficit, this big outflow that's becoming persistent and growing for what it calls IT services or digital deficit. So when they dug into what exactly that meant, they found the Japanese are paying billions of dollars for subscription services to stream video, for music, for electronic books, for internet advertising, and so on. And it all adds up to something that's, equivalent to about $35 billion of payments going out of the yen and into the dollar and other currencies. So, that has the effect of putting a little bit of a downward pressure on the yen when everything else is balancing out, a bit of a hole there in the accounts. And so that's why they see it as something that could be, a negative and a permanent drag on the yen, because it's not going away anytime soon.
So, Paul, the yen's fallen more than 5% against dollar this year. What's the outlook from analysts at Barclays?
Yeah, well, unfortunately, it's not all it takes to determine the currency, according to Barclays. So they're actually pretty bullish for the yen over the coming year. They think that inbound tourism is going to have a much bigger impact than this digital deficit that they're talking about. Plus, they see the potential for the BOJ to start tweaking its yield curve control some more later in the year. So they're looking for some appreciation towards the 123 by the end of Q1 next year. So quite a long way from where we are at the moment, around the 138 level. So doesn't have that huge a bearing on the overall direction of the currency, but it is something that is interesting to know, Francine.
Paul, thank you so much for all of that reporting. Paul Dobson, of course, in Asia for us. Coming up, Greece prepares for an election this Sunday. What should we expect? We'll discuss that next, and this is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, we're getting a bit of breaking news out of the G7. The G7 will work to further curtail Russia's use of the financial system. We had a terrific briefing from our Ross Matheson, who's, of course, in charge of the event on the ground. She's in Hiroshima for the G7, and he was saying, of course, when you look at some of the things that they can do, it's also shadow banking and trying to curb some of the things that Russia so far has been able to do in terms of the financial system. Now, Greece prepares for an election this Sunday as its economy rebounds, nearing where it was before the debt crisis. Unemployment has more than halved from its peak of 28%, but austerity's painful legacy still cuts deep in the country. Paul Tugwell, our deputy bureau chief in Athens, joins us now. So, Paul, what's expected in terms of results? It seems to be a very difficult and fraught election.
It is, but polls over the last few months have been pretty consistent in showing that the centre-right New Democracy Party of the current Prime Minister, Kyriakos Mitsotakis, will place first. But he's not seeing winning enough votes to be able to form a government on his own, and that's because these elections will take place according to a proportional representation system, which makes one-party government quite hard to achieve. That change was introduced by the former Premier, Alexis Tsipras, who's leader of the leftist Syriza party. What does that mean? It means that the only way we can have a government from these elections is for a coalition. Mitsotakis is dead set against that. He's an advocate of a single-party government. Tsipras is willing to form a coalition, but he would need the third largest party, the Socialist PASOK party. But the leader of that party, Nikos Antolourakis, has said that Tsipras cannot be prime minister for him to join a coalition. What does that mean? It means the Greek president, if she wants, can invite the party leaders of all parties in parliament to form a grand coalition. If she thinks that wouldn't be a worthwhile exercise, then we would go to a second election sometime in early July. What changes? Why that's important? Why do we care? Those elections would take place again on another electoral system that would give as many as 50 bonus seats to the party that comes first. Under that scenario, based on recent polls, Mitsotakis could possibly just fall short of an overall majority or have a very slim majority. And that would, depending on that result, would give the possibility of some instability at that point.
But the concern, I guess, Paul, is that, this was an economy that really had to reform and went through painful process. What does this, all of the uncertainty, the possible, coalition forming mean for the economy?
Sorry, I didn't quite hear the last part of your question.
What does this mean for the economy? What's at stake?
In terms of the second elections, what really is at stake there is whether Greece will be able to regain, as markets expect, investment grade this year. Greek government bonds are trading at a level similar to Italian bonds, and obviously Italy has investment grade. Greek stocks this year so far being amongst the best performers in the world, and Greek economic growth is above the Eurozone average. If the country is able to obtain investment grade, that would, of course, open up the door for more investment into the country. As many investors, investment funds only invest in investment-grade countries. But they obviously will wait, the rating agencies, to see what happens after the second elections before making a decision on that. And that also is important to get that grade because it would help economic growth even further, and would also help Greece to continue to reduce its level of debt. It saw the biggest reduction in GDP ratio to debt last year.
Yeah, Paul, so we'll, of course, follow that election very closely. Paul Tugwell from Athens. We'll have plenty more throughout the day. Bloomberg Surveillance continues in the next hour. Sonali Bazek in New York, Anna Edwards here in London.
almost half of all American women in opposite-sex relationships now make the same or more than their husband. That's a record high. According to a new report by the Pew Research Center, a third of U.S. women are in egalitarian marriages, making roughly the same as their husbands, and another 15% of them are the breadwinners. Women with college degrees and no children, as well as Black women, are even more likely to make more or the same as their partners. But not everything is a bed of roses. Working wives still carry most of the weight of unpaid labor. Women in egalitarian marriages spend almost twice as much time taking care of the home or a loved one, while dedicating less time to leisure.
Women are continuing to go out in the formal labor market and contribute and are still bearing all of the load of responsibility that disproportionately falls on them in terms of family care.
During the pandemic, in the wake of school shutdowns, the height of the childcare crisis pushed nearly half of American women out of the labor force, a trend that's yet to be reversed.
Women are just really struggling to meet the care needs of their family, and at the same time are really, really leaning into the labor market. And I don't think we've seen this before in history, to be honest.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability. And we have differences. We're capitalists; they're not. And it's okay. We could sort that out. But we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
I think we're right in the middle of that sweet spot. You are in this sort of limbo where the data is not clear-cut. For us, that is perfect.
For clients, you simply try to monitor markets that are sending you conflicting messages. The equity market is essentially saying, well, this is business as usual. The bond market is pricing fears.
I think we're going back to something like the 80s and 90s. We're going to go back to like a stock-picking, rotational type of market. It isn't so much, is the S&P going to go up? It's which sectors and which stocks are going to perform.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Bloomberg's learned that Ukraine's President Zelensky will travel to Japan to visit the G7 summit in person. The leaders there will focus on toughening up sanctions against Russia. President Biden's pushing his negotiators to keep pursuing a deal to raise the debt limit. House Speaker McCarthy indicates there could be an agreement by this weekend. And a change at the top of Lazard, the investment bank that's been hit by a slump in deal-making. CEO Ken Jacobs plans to step aside and be replaced by Peter Orszag. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Shonali Basak in New York. Kriti Gupta is off today. Shonali, it is very good to have you with me this Friday. And we're focused on two things, really, aren't we? We're focused on the G7 on the one hand. We're also focused, and that's the geopolitics of the day. We're also focused on those Washington debt conversations, Wall Street taking its cue from Washington, and the mood music has improved over the last couple of days.
It has improved, but if you take a look here, Anna, we are looking at mood music that has not improved that much in the bond markets. There's still a little skepticism baked here on what a debt ceiling really looks like when we look at negotiations over in Washington. But let's take a look. We do have optimism here in S&P futures. We are seeing them rise in conjunction with some strength over in European equities. We are looking them up at about 0.2%. Nothing too crazy here, but some green on the screen is nice after a very tough couple of weeks for the S&P, kind of flat for a couple of weeks here. The two-year yields, however, we are looking at a 422 handle, and if you look at that, that is down a little bit from the levels we saw yesterday, but much, much higher than we saw last week. This is the week of the fours. We have broken that 4% level, but 422 headed into the weekend. It shows you there's still a bit of jitteriness under the surface in those debt ceiling talks. Now, the Bloomberg Dollar Index, in conjunction with the yields, lower on the day, but again, it has been stronger all week. Crude also here, Anna, getting a lift, looking at 72 on the day, heading into the weekend.
And let's have a look at where we are on Europe then, Shonali. We've got European equity markets gaining, but really this is a little bit yesterday's story. This is the optimism we saw on Wall Street going around the globe through Asia and into the European session and pushing European equities higher. As a result of that, we have some of the high beta sectors doing pretty well today, from technology to the auto space. Most sectors actually in positive territory this morning here in the European session. Financial services also, private equity names, some of those doing pretty well. UBS on the rise as well. So this is the picture. European equity markets are moving higher. Let's pick out the German market as an interesting area today, because it looks as if we could be getting a record close on the German DAX. That's certainly what it looks like from the middle of the morning here, European time. We're up by 0.7% on the DAX. Clearly, the reopening in China has been a big driver there, and also a better than expected winter, given our expectations for winter were really tough going into it. So all that has helped the DAX to recover. This is the Greek 10-year yield. I put this in because we have an eye on Greek politics this weekend. There's a vote, a leadership election taking place on Sunday. And what's at stake here from a financial markets perspective is whether Greece is going to be able to reclaim that investment grade rating. And that could make a real difference, because we see 4.037, that's what it yields right now, actually below where Italian debt of a similar tenor trades. So that is interesting, but that's what we're watching for in terms of the Greek story, economically at least. And this is Ubisoft. This is a corporate story here in Europe. French game maker, that stock down by 4.4% after their numbers and after a downgrade from one of the brokers. And I also have oil for you, Shonali. 76.19 is where we trade, also up around 0.4%. Bank of America talking about a supply deficit in the second half of this year.
Anna, we're going to go back to U.S. geopolitics here, because we know that Ukraine's President Volodymyr Zelensky will travel to Japan to join G7 leaders in person. Officials have added an extra session to the summit's schedule on Sunday to accommodate his schedule. Bloomberg's Anne-Marie Hordern broke the scoop with Jenny Leonard. Anne-Marie joins us now in Hiroshima for more. Anne-Marie, what can we expect out of his appearance at such a tense time?
Well, this is just a deeply symbolic move, given the fact that it's happening here in Hiroshima. That is where he is going to address the G7 leaders right here in the city that today President Biden and other leaders visited the Peace Park, and they saw the destruction of the first ever nuclear weapon that was dropped on this city some nearly 80 years ago. And it comes at a time when Putin is waging war on Zelensky's country of Ukraine and periodically uses the threat of using atomic weapons in Ukraine. So there's deep symbolism to this journey. But of course, what we do know is that Zelensky has been touring European capitals. He was in Rome, he was in London, where Anna is, and he's been asking for more ammunition and military support as they're going into this counteroffensive. The other big topic, of course, when it comes to Russia's invasion of Ukraine is how this group is continuing to monitor the sanctions they've laid on Moscow. One thing they want to do is shore up some of the holes and the loopholes that Russia has in obtaining some material they need to continue this war.
Right, so the focus in terms of policy against Russia then on shoring up those loopholes, as you say, Anne-Marie, and perhaps taking some action, but not an entire ban on Russian diamonds. Moving away from the details of what is being talked about at the G7, I'm sure President Biden also thinking about what's going on in Washington. Take us through the latest on the debt ceiling.
He certainly is, and this morning, very early Japan time, evening U.S. time, he spoke with his key negotiators who are now dealing with the Republicans to try to hammer out this agreement, and he sounded very optimistic, and he said to them, continue on these negotiations, and it comes on the heels that you have Speaker McCarthy saying potentially there could be a deal emerging in principle over the weekend, and then Senator Schumer leading the Democrats in the Senate saying, I may have to call back senators next week for a vote. So what you want, grain of salt, we did hear from Patrick McHenry. He's the chair of the Financial Services Committee. He's a key ally of Speaker McCarthy, and he said there is not a deal just yet, but it does look like it's moving in the right direction.
Bloomberg's Anne-Marie Hordoran reporting from Hiroshima. Thank you so much for your time and great scoop. Fed officials are sounding increasingly split over whether to raise or pause interest rate hikes at their next meeting. While Dallas Fed Chief Lori Logan suggested she's not ready to pause tightening, Governor Philip Jefferson made the case for patience.
That monetary policy works with long and variable lags, and that a year is not a long enough period for demand to feel the full effects of higher interest rates.
Bloomberg's Valerie Teitel joins us now for more. Valerie, just an incredible amount of Fed speak this week. Not to forget Powell speaking just this afternoon. What is sticking out for markets?
Sonali, yesterday it was definitely these Logan comments that rocked markets a bit. They were very hawkish, probably the most hawkish we've heard in quite a few weeks from a Fed official. And remember, she is a voter. She came out saying that the current data doesn't justify a pause, and she hasn't seen the progress yet that they need to make in order to rein in inflation. Now, two-year yields moved higher on this. Now, a lot of people say the fall in treasuries yesterday was more to do about the debt ceiling optimism, but I think if you all think this is the debt ceiling, you're missing the main point here. The premium for the June hike yesterday hit 40%, and we can't forget we've had some strong data out of the U.S., including jobless claims yesterday and retail sales, all causing the two-year yield to rocket 30 basis points higher in just the last few sessions. And with this, guys, it makes almost the NASDAQ rally yesterday even more impressive that it's doing that in the front of higher two-year yields. Now, we do have more Fed speak to come today. We hear from John Williams in just a few hours, but that's not to overshadow. We hear from the man himself at 11 a.m. today. Jerome Powell will be on a panel with Ben Bernanke. I think given these hawkish comments from Logan yesterday, if we don't hear something dovish from Powell today, the market might take that in stride and begin to think that a June hike is a real possibility.
Okay, well, so much for the pause. We'll see if we get back to that conversation. Valerie, a Bloomberg scoop here in this part of the world reporting that the ECB's annual review will likely pay more attention to banks' management of liquid funds. The collapse of Credit Suisse has appeared to heighten concerns. So what do we know so far about this? I mean, neither Credit Suisse nor SVB or the other regional bank chaos happened on the ECB's watch, but why is this affecting their policy?
Look, it's clearly hitting some sort of nerve within the ECB that they might need to act on it. It's part of their annual review that this Bloomberg scoop says that they're going to put more scrutiny on banks' liquidity positions, especially when it comes to their liquidity coverage ratio and their HQLA. That's their high-quality liquid asset requirements. Now, this review is not due until the middle of the year, and it doesn't expect it to be action upon until the fall. That being said, it needs to be said that the European banks, the weighted average liquidity coverage ratio of European banks stands substantially above the ECB's minimum. So I'm not sure there's a direct market impact for banks right now, but it's interesting to note that the ECB is scrutinizing it.
Valerie Teitel, thank you for your time. Now we're going to move over to a big shakeup on Wall Street. Lazard CEO Ken Jacobs is stepping down amid a slump in deal-making and a plunge in the company's stock price. Jacobs will step aside and he will be replaced by Peter Orszag. Joining us now to discuss this is Bloomberg Finance editor Michael Moore. Mike, thank you for joining us because this is a very big move, but there has been somewhat of a succession plan in place here. How surprising is it to see this transition over at Lazard?
I think, you know, if we go back to when Jacobs took the job in 2010, you know, it was right after Bruce Wasserstein died. He was seen as kind of this emergency appointment, and to be here 13 years later with him as one of the longest tenured leaders on Wall Street, you know, it's been quite a run. So from that perspective, it's not surprising. You know, Lazard's share price has struggled amid the deal slump. You know, therefore, it makes some sense for this to be a period of change.
And Michael, let's pivot slightly to another area of financial services. We've heard from Robin Grew, the newly appointed CEO of the world's largest publicly listed hedge fund. She spoke on Bloomberg's Masters of Business podcast in her first interview since taking the role.
The firm is brilliant. I mean, it has a cracking core business. And my number one job, apart from anything, is not to break that, because that is value and it's real and it will continue to grow.
A really fascinating podcast then there, which you can find on the Bloomberg terminal and elsewhere. But what did you take away from the conversation? She talked really in interesting terms about the way you recruit for hedge funds and financial services. But what did you take away in terms of how she runs the business?
Yeah, I mean, she really preached continuity here. They've been on a good run in terms of attracting assets in what's been a tumultuous period, not just for markets, but for the broader asset management industry. They've kind of defied that. They've been steadily bringing in assets, and it seems like she does not want to break the momentum there with any major changes. But it'll be interesting to see when she's been in the role for a little while longer if she makes some tweaks around the edges. She did talk about AI, and she seemed fairly bullish there, talking about how the fears are overblown and it can make a difference for some companies. So that will be interesting how that starts to creep into the asset management industry.
Yeah, and on the theme of continuity, she did talk about how the business has used and will continue to use technology, and also the M&A strategies development in the United States got a specific mention. Michael, thank you very much for that. Bloomberg's Michael Moore with the latest on those financial services themes. Coming up on the program, we'll get back to a markets conversation. Miles Bradshaw joins us, JP Morgan Asset Management Global Head of Aggregate Fixed Income Strategies. A great person to talk to about the debt ceiling, where that takes us, and his latest hawkish commentary coming to us from the Fed. We'll also speak to Annika Trion, Chief Economist at Van Lanschot Kempen. We'll talk global economics, but also investment strategy. Plus, Deere is out with results before the US market open. More on what to expect from the tractor maker ahead. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Yes. Not keeping, look, people have conviction, or they invest if they invest for the right reasons, just keep at it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
Surveillance Early Edition. I'm Shonali Bassick in New York with Anna Edwards in London. Now, the credit crunch has fueled a record pace of restructurings this year. Just in the past week, we saw 7 notable companies file for Chapter 11 bankruptcy protection. And billionaire investor Mark Lasry, who specializes in distressed debt, told me there's more to come.
You're going to have more bankruptcies. You're going to have more problems. That's why the Fed is going to lower rates, right? They're going to have to. And then the question is it a mild recession? Is it a hard recession? I think it ends up being a mild recession because the economy is doing well, but you're going to need more money into the system. That's why the Fed will lower rates.
Joining us now is Dana Al-Baltaji, Bloomberg's managing editor for credit. You know, when we look here at the wave of bankruptcies we've already seen, what can we expect ahead, given that there are still so many recession fears?
I think exactly as it was expressed before, you're going to see more of the same. At the end of the day, when you have a tight credit market and companies can't raise debt, and appetite for companies whose finances aren't exactly 100%, quite low. I mean, there was a time when you could find an investor that could invest in you if you can't really tap the market for cash, but now is not that time. We're seeing a crisis of valuation, and we're also seeing investors within the credit world that have no appetite for companies that really should not have survived this long anyway.
Yeah, that's interesting, and interesting to shine a spotlight on what we're seeing there in terms of bankruptcies. Dana, thinking about the companies that are coming to market and raising money, those that are in the market's good books, if you like, they're seeing a window, or they have seen a window up to now, up to maybe next week, where there's a lot of focus on the X date and the debt ceiling conversations in Washington, and getting corporates just wanted to avoid having to raise cash around that period.
I think corporates have learned a very important lesson over the last year or so, and especially over the last 3 months, which is that if there are no big headlines and if volatility is low, you sell. Sell as much debt as you can, try to tap the market, because that window will close. And I think that's exactly what we saw within the US and European markets. The primary markets have been super hot. And so I think next week, when there's a decision, if there is one, you might see a slowdown as volatility shakes the market a bit. But I think for the rest of this year, you will see this sort of trend. When there is a window of opportunity, you'll see a flood of issuance with people trying to get cash while they still can.
How are investors, especially debt investors, really thinking about the impact of the U.S. debt ceiling debate here? Are there more risks that are under the surface that could impact issuance in other markets?
Of course, one of the things, I mean, obviously if the U.S. defaults, then all bets are off. But if the U.S. doesn't default and there is a deal, then one of the possible risks is that you could see a flood of issuance on the T-bill side from the U.S. And if that were to happen, what you could see is a tightening of liquidity among banks. That in and of itself could be problematic for the corporate debt market, because if banks don't have more capital, basically, to deploy within the markets, then the cost of borrowing starts to go up. Liquidity is absolutely key here.
Okay, Dana, thank you very much. Dana Al-Baltaji joining us there from Bloomberg, of course, with the latest on credit markets. And you can read more about these stories and more in The Brink, Bloomberg's twice-weekly newsletter detailing corporate bankruptcies, distressed debt, and turnaround stories globally. This is Bloomberg.
analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
Surveillance, early edition. I'm Shonali Bassick in New York with Anna Edwards over in London. Now, keeping you up to date with the news from around the world, here's the first word. The U.S. and Taiwan have agreed to increase their trade relationship, and it's the first tangible results from an initiative that faces vehement opposition from China. The Taiwan Initiative isn't a formal free trade agreement and doesn't address thorny issues such as tariffs, but it still clouds the outlook for a visit to the U.S. next week by a Chinese commerce official. Over in Montana, a group of TikTok creators has sued to challenge the first statewide ban of the popular video app. A bill signed into law this week will prohibit TikTok's download by the general public, and the suit claims, among other things, that Montana is banning speech it doesn't have the right to suppress. Another development for Disney as the company engages in a high-profile fight with Florida Governor Ron DeSantis. The world's largest entertainment company is dropping plans to relocate 2,000 California workers to new corporate campus it was building in Florida. Disney is also closing a luxury hotel at its Orlando amusement park. And a new report from Barclays says a Netflix addiction is turning into a structural drag on the Japanese yen. According to strategists, Japan's so-called digital deficit stems from payments to overseas tech companies such as Netflix and Amazon. And they say its continued expansion will put pressure on the yen. And how remarkable there that you do see such a large global company weighing on one of the largest global currencies.
Yeah, absolutely. I mean, to be fair, it's not just Netflix, it's payment for all kinds of streaming, whether that's music or video, but it is an incredible thing that has an impact on your country's currency. I'm sure Japan is not alone there. Thinking about Japan, we have G7 leaders, of course, meeting in Japan, Shonali, and we're just getting live pictures of the G7 leadership team visiting the Itsukushima Shrine in Hiroshima Prefecture. They're having this tour. They're going to have a group photo later, as these things often do, with a working dinner later on today. A lot of the work so far and the commentary has been around Russia and Ukraine, as you'd expect. The G7 calling earlier, reiterating earlier that they want Russia to unconditionally withdraw from Ukraine, wanting to reduce Russia's use of the international financial system, close any loopholes there, as we heard from our colleague Anne-Marie Hordern earlier on. They've also said earlier they think the price cap on Russian oil is working. So G7 leaders enjoying that tour perhaps right now. Earlier in the day, they visited the site of the Hiroshima nuclear explosion, of course, and so a nuclear attack. So they will certainly have that in their minds as they consider all things Russia, Ukraine. More on the markets when we return. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. Bloomberg has learned that Ukraine's President Zelensky will travel to Japan to visit the G7 summit in person. The leaders there will focus on toughening up sanctions against Russia. Now, President Biden is pushing his negotiators to keep pursuing a deal to raise the debt limit. House Speaker McCarthy indicates that there could be an agreement just this weekend. And a change at the top of Lazard, the investment bank that has been hit by a slump in deal-making, now has a CEO, Ken Jacobs, planning to step aside. He will be replaced by Peter Orszag. I'm Shonali Basak in New York with Anna Edwards in London. Kriti Gupta is off today. Anna, what are the markets looking like over there?
Yeah, well, European equity markets then catching up really on yesterday, in a sense, Shonali, catching up on the session on Wall Street yesterday, the positivity, the risk-on mood we saw there, all connected to the debt ceiling debate. But the Stocks Europe 600 up by 0.6% right now. Most sectors in positive territory as we go through this morning. Financial services, private equity, those kind of high beta sectors doing pretty well today. The DAX is interesting. It looks as if it's on course for a record close on that German index. The fact that we've seen Chinese reopening has played well for Germany, and the winter not being as bad as it could have been given the issues around energy supply. All of that has added up to a period of strength for the DAX. Now, the Greek 10-year yield is unchanged. The reason I put this in here is just to flag that we have an election taking place in Greece on Sunday. And one of the things from financial market perspective that is at stake is whether Greece is going to reclaim, many, many years after the euro crisis and the debt crisis in Greece, whether it's going to reclaim its investment grade credit status. And we will see whether that happens. Interesting that this percent that it trades at, this yield it trades at, is actually actually a little lower than the one attached to Italy right now, to BTPs at the 10-year. So that's interesting. Brent crude is 76.58 right now, up by a whole percent, Shonali. So actually gaining momentum through this last hour or so as we watch oil markets. Certainly Bank of America talking about further upside for oil prices in the second half of the year, given driven by supply deficits, they suggest. What do you see on U.S. futures?
Yeah, absolutely. When you're looking at New York crude as well, you're looking at almost 1 percentage point higher as well. But really, you're seeing a lot of action here and a cooling of the 2-year yield, Anna. That's what's interesting me the most today, because you did have that big rise above 4% this week, but you had it about 4.25 yesterday and now down to about 4.21 today. The U.S. dollar index cooling in conjunction. You have S&P futures looking a little higher on the day, but not that much, about 0.1%, a little more than that. Nothing to cry home about, but it is a green day today in the U.S.
Okay, let's get into a markets conversation. Miles Bradshaw joins us, JP Morgan Asset Management Global Head of Aggregate Fixed Income Strategies. Miles, really nice to have you with us. It seems that the mood has improved a little around the whole debt ceiling debate in the United States. The short end of the Treasuries market has been taking this kind of seriously for the last few weeks, maybe more seriously than equities. But I want to ask you about how you're approaching the debt ceiling in the short term. How are you, what conversations are you having with clients? What do you suggest people keep in mind as we watch these things unfold?
Yeah, I think the news we've had over the last few days is better than markets have been expecting, and the idea that the McCarthy now thinks they may have enough to put this in principle to the floor of the House suggests that a deal is in principle at least is there, and that's the market reaction we've seen, and that's the big sell-off you've seen in bonds the last few days, the equity market rally. I think what the market isn't really thinking about is what is the compromise that's going to be done between the White House and the Republicans in Congress, and that compromise is likely to be fiscal tightening. There's no way that the Republicans are going to agree to a deal that doesn't involve any form of fiscal tightening, and that's not going to be good for growth next year. It's not going to really be an issue in the near term, but it's not going to be good for growth next year. The other thing I think the markets are not yet focused on, because we're dealing with the relief that we don't have a default in the US, is that actually now the US is going to issue about $1 trillion worth of T-bills. And this is going to drain liquidity out of the system. So again, it's not really, in terms of the longer term, it's not particularly good for liquidity as you get greater pressure on bank reserves due to quantitative tightening, and in this case, from increased T-bill issuance, which will then be put back at the Fed in what's known as the Treasury General Account, which is where the Treasury deposit their cash at the Fed. That's gone down to zero. The Fed have used that as a form of extraordinary measures. So those are the two things the market's not thinking about. But right here, right now, clearly it's relief that the probability of a default is going down substantially.
And Miles, thinking about that fiscal tightening impulse, and that's a conversation a few guests have pointed out over the last few days. I mean, how significant is that going to be for an economy that, for many, is assumed to be slowing?
I think it's going to be, it is significant. There's no way around it. I think we look at the data and we see lots of evidence that monetary policy is restrictive. You see lots of that in the business surveys and capex intentions. You see that in terms of bank surveys, credit surveys showing that credit conditions are at sort of the typical peak tightness that you get in the economic cycle. And then to have fiscal tightening on top of that is, again, another factor that increases the recession probability. I think the issue with that is it's a bit down the line. It's not going to happen in the next month or two. It's going to happen down the line. But for a fixed income investor, I think these are the long-term factors that, to me, make bonds an attractive asset class when you look at what the market is pricing in terms of the interest rate cycle.
Talk a little bit more about what you're thinking in terms of fixed income returns. What is a good year looking like to you, Miles, if you're so positive on fixed income?
Well, I think the first thing is a good year is actually driven by the coupon they're getting on fixed income, which is up substantially from what we had a couple of years back. And if you think about what the rate hikes did to returns last year, it was actually negative capital returns. And whether the Fed raised rates once or not, I mean, I myself think we're going to be looking at cuts this year. That's not going to be a material driver, one or two additional hikes from the Fed in terms of total return. So I think that's the first thing, is you're getting a yield that's attractive in the order of 4% for investing in global fixed income. And if you move into credit spreads, then you're looking at 5 and down to 8, 9% if you go into high yield. That's the main driver of returns. The thing that makes me really excited, though, is the prospect of capital gains as the economic cycle rolls over and as the Fed cuts interest rates. And this is tricky in terms of calling precisely the moment, the timing of the first cut. But when you look at what the market prices over the next few years, you have a market that's pricing rates to go back towards just above neutral. The Fed say neutral's at 2.5%. The market prices rates at 3%. And I think the reality is that the recession means that rates are likely to be cut by more.
What do you think in terms of a recession and its impact on high yield, for example? Do you think investors are going to continue to flock to safety, or are they going to start to be comfortable with some forms of credit risk?
I think right now the high quality assets are the most interesting parts of the market, not the high yield sector. High yield spreads are not pricing enough of a recession risk premium. So if you think you're in a soft landing world, then fine, you can invest in high yield and capture that additional yield. But typically high yield spreads peak in a recession. And for us, the more interesting aspects are the higher quality things like agency mortgages, where those spreads are at their sort of secular wides in terms of the pickup you get over treasury bonds. So right now, I think it's important to build a more cautious portfolio, owning core yields, owning high quality assets such as agency mortgages. In Europe, you've got a similar phenomena you've seen with agency bonds, whether it's KfW or EU bonds, that have been driven by a lot by what we've seen in quantitative tightening and the big increase in volatility from central banks.
We have been talking, of course, about the debt ceiling, Miles. We've talked about the year ahead, and we haven't mentioned the banking sector in the US and whether that comes back as a sort of risk consideration. Are you thinking that we are through that, or is this something we need to also keep in focus?
It does feel like the acute phase is over. It's very difficult to have great high conviction about if another bank will or not go bust, but it does feel like the acute phase is over. So what I have more conviction on is the chronic issues, and that is that every bank liquidity is being tightened. It's being driven by quantitative tightening. It's being driven by the fact that retail depositors can switch from their bank savings accounts that pay about 0.5% and move into a money market fund that pay 5%. So liquidity, particularly in smaller banks, is being drained. And the issue is the excess reserves are not distributed across the system uniformly. And that means that those banks have to improve the quality of their balance sheet. And you've got a story today about the ECB stress testing liquidity there. So the entire banking system is focused on improving the liquidity of their own balance sheet, which means that credit is going to be more expensive for the real economy.
Miles, thank you so much for your time. Really good to speak to you. Miles Bradshaw of JP Morgan Asset Management. Thanks for joining us. Quick word on some breaking news just hitting the Bloomberg terminal. A red headline tells me that the Chinese PBOC vows to curb speculation in Forex markets. It is urging institutions to maintain Forex market stability, wants to curb speculation on yuan rates when necessary. This coming from the Chinese central bank, and you can see the impact that this is having on a stronger currency, a stronger yuan as a result of these headlines. We will keep this in focus. This is Bloomberg.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back to Bloomberg Surveillance Early Edition. We just got that news out of the PBOC vowing to curb speculation in the Forex market. And of course, that's pushing the yuan a little bit higher, a little bit firmer as we get towards the end of the Asian trading week, of course. What the backstory to this is that the yuan has been weak because of the weakness in the data that we've seen coming out of China. And so let's get into a conversation about where that Chinese growth weakness takes us. Annika Trion joins us, Van Lanschot Kempen's chief economist. Annika Trion, thank you so much for joining us. So, I mean, to what extent do you think that the Chinese reopening story perhaps under-delivering on some people's expectations? How much is that a weight on global growth right now?
Hi, Anna. Well, we've come from a long period where we were globally always relying on China to be this big pillar of supportive growth in all environments. And obviously what you see now with a very fragile global growth environment, with the big reopening story of China, obviously it's been quite disappointing that Chinese growth has been much more domestically driven and will be much less helpful in an already weak global growth picture.
At the same time, we have the DAX looking like it's on track for a record close, Annika, and part of that is to do with the Chinese reopening and the benefits that has brought for some European businesses. Are you still playing that kind of theme as you try to find companies and management teams that have a unique competitive position? How important is that China flow into Europe?
Yeah, well, you mentioned the unique competitive position, and I'm just going to zoom out really, really quickly and then zoom back into your question. But we've sort of taken this so seriously, we've actually dubbed it as our investment manifesto. And that means that whether we're stock picking, bond picking, fund manager selection, ETF selection, we always look for three principles. That's one, we're looking for a very strong competitive position, two, a very strong focus, and three, a very strong alignment. And to your point, Anna, I think it's not only about China, it's in general. Where are there companies, be it European companies, be it US companies, that have such a strong market positioning that are likely to, be able to enjoy their own growth trajectories with strong pricing power, etc., and be able to benefit from exporting to countries like China who are actively seeking their product or service.
When you're thinking about market liquidity right now, what are you thinking about how much risk there is that tighter financial conditions could lead to still more drawdown? Do you think that you need to position for a downside here, or are you positioning through the cycle?
Yeah, so I think you hit the nail on the head. So right now, the only thing we should be talking about is liquidity, because we're all harping on over and over again about recessions, inverted yield curve, more than a year of incremental negative leading indicators for the economy. But the reason that markets have held up, the reason why credit spreads are narrow, the reason why the VIX is rather moderate is because of liquidity, which has been quite strong. And to your point, you do see that faltering, whether it's from the banking sector because of tighter conditions, given the last few items that we've seen there, be it from a monetary policy perspective. So that's definitely the largest risk for markets, yes.
Well, you mentioned credit spreads here, remarkably calm. I think that has been confusing a lot of folks that have been watching the market. How much do you expect them to reasonably blow out?
It is confusing, but again, it boils down to what we just discussed, liquidity. So let's think about liquidity in the bigger picture. We've come from an era of 10 years of, whenever there's a problem, let's throw money at it, either from a monetary policy perspective or from a fiscal policy perspective. Low rates, quantitative easing, since actually 2008. We were entering into the new era of QE going into QT, going into tightening. And then you see three major central banks in the world actually halting their QT programs because of issues that have popped up, i.e. this addiction to liquidity that's really hard to get rid of, be it the Bank of England around the gilt crisis, be it the Fed around the banking crisis, be it Bank of Japan with their yield curve control. So to identify what's going to happen to spreads, we first need to identify what the path of future liquidity will look like.
Annika, thank you very much. Thanks for your time. Annika Treon of Van Lanschot Kempen joining us there with thoughts on the markets and the global economy. Coming up, Deere is out with its first quarter results. Before the US market open, more on what to expect from that tractor maker next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Surveillance Early Edition. I'm Shonali Bassick in New York with Anna Edwards in London. Now we'll look at some of the stocks we're watching in pre-market trading in the U.S. We're looking at shares of Farfetch. They're soaring in pre-market after the specialty online retailer's first quarter results beat expectations on the back of growing sales volumes in the U.S. and in China. PacWest is continuing to gain from a relief rally in regional banks, and Applied Materials is lower after releasing quarterly results that unearthed weaknesses in the memory chip market. Anna.
Yeah, underlining that weakness then, and the stock down by 1.8%, as you suggest there, Shonali. Let's get to some corporate earnings that are due out imminently, very early stateside. We're watching Deere, which is going to be reporting results this morning. The farm equipment maker is expected to benefit from strong demand, but investors will be watching for its full-year profit outlook. For more, we're joined by Bloomberg Intelligence industrials analyst Christopher Cellino. Christopher, really nice to speak to you. So expectations seem to be high here. Are we talking about an industry that's seeing large agricultural equipment demand coming through with strength? What's the demand picture like?
Yeah, we expect a real strong quarter from Deere. Demand for large ag equipment remains healthy despite this recent deterioration that we've seen in crop prices. You also have more production days this quarter. Pricing continues to be remarkably strong, and we expect to see some improved productivity as the supply chain continues to normalize, which really should set the stage for a pretty solid quarter. And essentially all machinery companies have beat estimates this period, including their closest peers, CNH and AGCO, which both beat and raised. So anything less than a convincing beat here would be a disappointment.
Well, what are the risks then to such strong performance numbers expected?
Yeah, I think one of the areas of risk that investors would be focused on is their small ag business. This is one area I would say of relative weakness in the portfolio. It's the one business where they could miss expectations here, probably just given some of their consumer exposure and some weaker market dynamics. But that's really the one area of weakness. Large ag continues to be strong. Construction should be strong as well.
Deere shares have been down about 14% already this year. Are you saying that on the heels of stronger performance that the stock has maybe bottomed? A lot of this is due to so many recession fears.
There's a lot of concern out there that we are near peak earnings. So that's why you've seen a lot of these machinery companies have really phenomenal, even record margin performance this quarter and sell off. There's a lot of concerns that this could be as good as it gets. So any commentary that Deere could provide on 2024 or any kind of commentary about a prolonged large ag demand cycle will certainly be in focus.
And Christopher, what's been the link between higher crop prices, and that's been a feature of the wider effects of the war in Ukraine, of course. What's the link between those higher crop prices, which clearly benefit some of the businesses that Deere is supplying, and underlying demand that Deere sees?
Yeah, it's really been a supply and demand factor. Ukraine had certainly played an impact on why we have seen these elevated crop prices. But, you know, if you look over the past 3 months, crop prices are down 15 to 20%. We're starting to see favorable growing conditions. You have higher planted acreage, and the extension of the Ukraine export deal, combined with some slower economic growth, has really weighed on the recent performance of crop prices. That being said, they're still at relatively healthy levels and still supportive of farmers making investments in their equipment.
And what about inventories? What do they look like now, Christopher? Are you seeing a lot of businesses that sort of provide that middle service? Are they sitting on large inventories of this equipment or not?
So inventories remain historically tight, both on the new and used side, which we think is a positive and probably lends support to sustained strength into next year. It's going to take a long time for a lot of these inventories to be restocked, and we think that could actually even take another full year, even if demand is flat next year. So that's certainly one positive catalyst as we move into next year.
You've been talking a lot about next year and the forecast ahead. What can spook investors here? How high is the bar that they have to set?
Yeah, I think if we don't get any commentary on 2024, or if we hear some commentary around their early order program with disappointing or decelerating order rates, that might be a concern. I would even say if they even just reiterated guidance, that may even be a concern with investors, especially assuming that we do get a very strong print, which I would expect, just like everyone else has reported this quarter. Without that guidance raise, I think people are going to be a little concerned that maybe this is as good as it gets.
Christopher, thank you very much. Thanks to Christopher Cialino of Bloomberg Intelligence to give us a preview on the Deere numbers. We're keeping across what is happening in Japan. The G7 leaders then, Shonali, meeting, of course, in Hiroshima, and we've been bringing you live coverage. These, in fact, pictures from, or images from just moments ago of the photo that is traditional on these occasions. G7 leaders then lining up for that photo opportunity. Itsukushima Shrine, I think, is what you see in the background there, in the Hiroshima prefecture, which is where they've been having a tour and now have this group photo. They're going to be sitting down for a working dinner. They'll be doing that later on today or imminently. And a lot of the focus of the conversations then, Shonali, that's been taking place has been around Russia and their approach to Russia, reiterating they want Russia, of course, to pull out unconditionally, importantly, from Ukraine, and also tightening up on the use that Russia can make of international financial services.
Then, of course, that is that visit from Ukrainian President Volodymyr Zelensky. But, you know, as we approach that visit, just take take a look at that show of unity here as you're showing, saying this, ceremonial picture being taken over in Japan, but certainly some big events set up for the rest of the weekend.
Absolutely, has a lot of symbolism, doesn't it, with President Zelensky on his way there to address those G7 leaders. That is it for Early Edition. Surveillance is up ahead. They'll be hearing from Priya Misra of TD Securities, keeping the market moves firmly in focus. They'll also perhaps talk pound strategy with Jordan Rochester. I see he's going to be talking to the team. This is Bloomberg.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. We started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And frankly, when people leave 23andMe, I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. I want to build out a true consumer-empowered healthcare world, one that is outside of the existing system. And there's no greater force than government.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We should see some progress on inflation in the coming months.
If you think the U.S. has an inflation problem, Europe has a much bigger one.
Real purchasing power has declined over the course of the last 24 months.
There's going to be a realization here that the economy is not collapsing.
The markets haven't done anything. So no one is right, no one is wrong.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly positive on the S&P 500. Is the bumpy road to nowhere starting to go somewhere, TK?
I think something switched yesterday. We can go, and it's going to be fun here through all the morning to talk about equities, bonds, currencies, commodities. John, pick your weapon. You were taking a break yesterday. You're on sabbatical. Lisa and I noticed the two-year yield going on to 4.23%. That's a change from the snooze fest of the last 4 days.
Just for the record, I think I talked about that repeatedly on yesterday's program. Yields higher for 4 straight sessions, Monday, Tuesday, Wednesday, Thursday. This is what stands out for me. Before you get too excited, Chairman Powell almost 9 months ago in Jackson Hole, Wyoming, talking about pain that we were all looking for over the next 9 months. That morning, the S&P 500 opened 41.98. The S&P 500 closed yesterday 41.98. 98. Let's go back to the chairman's words back in August of last year. Higher interest rates, slower growth, softer labour market conditions will bring down inflation. They will also bring some pain. But a failure to restore price stability would mean far greater pain. Tom, unemployment last summer, 3.5%. Unemployment now, 3.4%.
It's been a stability, and it's a changing idea. We've had 47 Fed speakers this week, and we've got a big, important meeting today. But the answer is, John, we've migrated forward to a better place. Most important thing that happened yesterday is someone we all respect, Carl Icahn, said, oops, I got it wrong. How many people out there feel like Mr. Icahn this morning? I think a lot of people miss SPX 4200.
Question now, Lisa. Did they get sucked in? Michael Hart at Bank of America this morning. What a quote. It would be so on brand for stocks to melt up into a recession, suck them all right in before the hard landing.
Okay, he's not wrong. Well, and here's the issue, though. Have they already been sucked in? And is it really, and Michael Hartnett was talking about this, has it already come in the tech sectors, particularly those tied to AI? I'm looking, for example, when you say, where has the pain been? Perhaps the index level looks one way, but take a look at the KBW Regional Banking Index. It's down 26% year to date. Take a look at some of the consumer discretionaries, down significantly. Right. This has not been a consistently range-bound market. Under the surface, paddling duck is doing a lot of stuff. I'm just saying.
Amy was Silverman. You kept that all week. That's great. I mean, the whole what's going on underneath the surface. John, the drawdown. Let's look at the bigger picture here. From the peak and the nirvana of 2021, how far down are we? And the answer is we've come back a long way, but still we're beneath where we were. SPX, Dow, even the NASDAQ down 16%. We got further to go to heal.
You want some gains? NVIDIA up more than 100% this year to date. Meta up 105% year to date.
Is that because they changed the name?
What a run. It was all about the name change, TK.
I think so.
Nothing else. In the equity market on the S&P 500, we are just about positive on the S&P this morning, going into the weekend, looking for more gains potentially. Yields in the bond market,
look at SPX,
just about unchanged. Down about a basis point. The 10-year, 363.45. If you want some more excitement, Tom, look to Europe. For all the talk that things are starting to unravel, for the long consensus trade European story as the data starts to shift the other way, DAX this morning, Bramo, record high.
Yeah. So, basically take all of those narratives and stuff them into the market and get a very unpredictable response. Today, we're looking at the G7 talks, which are kicking off. President Biden is meeting with other leaders. They're gathering in Hiroshima, Japan. We've been getting some pictures of them all meeting as they head to dinner. Hopefully, we'll get some messages, not only with respect to what's going on with the U.S. and the debt ceiling, but also just trade, supply chain resiliency, China, very much front and center. 8:30 a.m., Morgan Stanley's annual general meeting kicks off. Very curious to hear the kind of pushback that they get to James Gorman serving as chair of the board as well as CEO. I know that that's one of the main issues. And today, the Fed speak, this is the big issue. No one cares about New York Fed President John Williams speaking at 8:45 a.m. No one cares about Fed Governor Michelle Bowman at 9 a.m. 11 a.m., Fed Chair Jay Powell and former Chair Ben Bernanke in that discussion.
This is a small matter. Let me take 2 seconds here, John, because we've got an important guest. This panel's in honor of John Williams' great publishing colleague, Thomas Laubach, tragically dying of cancer, and I believe it was at 55, mourned worldwide. He's a German economist with great Princeton cred, and to have Bernanke show up here with everyone else and Powell makes this a special conference.
He was an advisor to Powell as well, I believe, right?
Oh, yeah, absolutely. Yeah. This is the guy, I mean, I think, I don't want to speak for John Williams of the New York Fed or Mike McKee, frankly, who knows this better than I do, but I'm going to suggest Laubach led the charge on this thing we toss around, our start.
Very cool. Well, looking forward to the Fed speak through this morning. Eric Friedman joins us, US Bank Asset Management. Eric, always wonderful to catch up with you, sir. Let's start here. Are we at risk of being sucked in to an equity market rally right before a big fall?
Jonathan, we do think that there is a risk here of people really capitulating to the upside. And again, our viewpoint has been consistent with what you shared earlier in the program here, that we think that the confluence of variables does work against both corporate profits as well as the consumer. We just haven't seen that happen in a material way yet. So our strategy has been, again, despite some of our concerns about both the where ultimately Fed funds are going to settle out, as well as how long they'll settle out, as well as the consumer, has been to shrink our tracking error. And we've done so, I think, somewhat with some degree of let's call it debate amongst our team, but it's been the right decision to sort of shrink up that tracking error. So I do think that 4,200 has been the level. And if we see that level exceeded on good volume, you could see people say, look, let's just throw in the towel here and wait for a better opportunity to be more negative.
Eric, as you know, level 1 CFA, you use John Deere as the accounting exercise. They're out with earnings. We're going to do the Deere earnings in a moment. All you need to know, folks, is their thumb up, up, up. And Eric Friedman, what I see here are corporations adapting to what they've been given, and most of them are delivering some form of surprise. Why does that end in the first quarter of this year? Why can't corporations keep delivering?
Yeah, Tom, I think it's been, and you've done a great job of talking about both resilience and adaptability, and that's been the theme for the last really 9 months in light of all of the macro concerns out there. I do think that the issue that the consumer is going to face is the aggregation of higher interest rates as well as liquidity, which I know is a topic that probably is undercovered, but you've got a couple of variables coming up. One, we think the Fed is going to keep rates higher for longer. Two, when the debt ceiling, again, not that anyone has an edge on if and when the debt ceiling is resolved, when that occurs, the Treasury is going to come to market with more issuance. And when that happens, you're going to see more capital float away from the system. You also have China likely slowing down its liquidity injections. And finally, you have QT going on. So all of those variables do stack themselves up against this idea of persistent resilience, if you will. We just don't know when those things are going to all come and basically confluence together.
On the headline level, on the headline index level, it is perhaps resilience. Under the hood, it's either a bubble, if you trust Michael Hartnett over at Bank of America with respect to AI-related stocks and tech, or it's potentially a complete downdraft when you take a look at the regional banks. When you say investors are getting sucked back in right before it crashes, are we talking about tech going down?
Yeah, Lisa, I think that a crash scenario is probably unlikely. We think it'd be probably more of a, melt up and then a gradual migration lower. There is, of course, the risk that a lot of people are talking about now of what's called that Minsky moment, that credit event that occurs that people just don't see. So gap risk is certainly there. But I think that from a sector standpoint, technology is still bolstered by CapEx. That's something that we've been really actively monitoring. And to your point, the word count around AI has been, let's call it the tailwind for a lot of broad tech spending. But ultimately, Lisa, I think that there's probably more of the consumer-related stocks are going to be more vulnerable. Again, it's been tough to bet against those. Technology does have still that desire from CFOs to get bigger, stronger, faster through investing in comm services. So that's probably not the area that we would bet against. We think that more likely the consumer side is the area that's a bit more vulnerable as we get deeper into this year.
Is tech no longer than interest rate sensitive? Is it not necessarily going to sell off if the Fed holds rates higher for longer?
Lisa, we've been debating that 2020 playbook scenario quite a bit. And I think that what you've seen in the last couple of weeks, especially as rates have gone higher, tech has done better. So I do think there's a level of decoupling between the idea that look, these are longer duration assets. And when we look at a discounted cash flow model, you have to have interest rates come down to justify cash flows being out maybe a little bit further in the continuum than investors would like. So our viewpoint is that because the fundamental basis is still there, again, to your point, there's been some, let's call it bubbly conversations about AI, and that's something that markets have been responsive to. But until we see corporations really hold back on CapEx related to communication services and big data and cybersecurity, it's a tough area to really be, not investing in. So I do think there's some decoupling happening with terms of rates and tech, but CapEx is probably the key variable to pay attention to as opposed to rates.
Eric, we've got to leave it there. Great to start the morning with you and close out the week with Eric Friedman there of the US Bank Asset Management. More earnings. Deere, here's the outlook from them. They lift their full year outlook for net income. Here's the range, $9.25 billion to $9.5 billion. They had previously seen 8.75 to 9.25. So, Tom, looking at that stock in the pre-market, we look pretty good, up by more than 3%.
Across the board, outlook and guidance will be important because can they do the jump they're doing right now? And the jump condition here is 3.8% up, make it 3.4% up on the stock. And I'm sorry, free cash flow turnaround, things look good. You wonder what the global's going to be as well. What's really important here is what do you do with Deere to keep this going? And the answer is you got to mow Central Park's lawn.
Oh, is that
I got to do my part for Mayor Adams.
What are you buying?
This is the dream lawnmower, folks. When I was a kid, and this is Oak Hill, the PGA Championship this weekend, and this is what the adults use, and this is why John Deere's doing so well here. It's the 220 SL precision cut. This is a little big. I think, me on that rig, I think is, it's a little too much.
How much does one of those set you back?
That's got to be large. The basic one you push from behind, that's a real mower with beautiful cutting ability, is about $3,200, which is a little more than the $80 one from Home Depot we were looking at the other day.
I can see you with a cigar.
You got there in a beverage. You got to have the beverage on. But, there's some safety features
there. Who's going to
drive it? What's great is you can get the dog sidecar like a motorcycle. Like
nice.
Fancy Italian.
Very
you
cool.
can throw vet bill right in there and you can be out there, doing the lawn.
Hey, look, the numbers look good.
Good, phenomenal.
The high end of the previous range is now the low end of the new range. Lisa, looking ahead for the year ahead.
My favorite was the net income for the second quarter, $2.86 billion. The estimate, $194 million. Talk about just that gap.
Linda Duson's going to weigh in on all of this.
Terrible.
Federated Hermes on equities in about an hour from now. Looking forward to that conversation. Futures just about positive on the S&P 500. Interesting couple of days of gains that we can build on through this morning. Good morning.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. President Biden is urging his negotiators to keep pursuing a debt limit deal. In a call from Japan, where he's attending the G7 summit, the president said he's confident that Congress will act in time and avoid a default. House Speaker Kevin McCarthy has indicated both sides may reach an agreement as soon as this weekend. Ukraine's President Volodymyr Zelensky will travel to Japan to join G7 leaders in person. Officials have added an extra session to the summit schedule on Sunday to accommodate his schedule. Over the past week, Zelensky visited European capitals asking for more weapons. The U.S. and Taiwan have agreed to increase their trade relationship. It's the first tangible results from an initiative that faces strong opposition from China. The Taiwan Initiative isn't a formal trade agreement and doesn't address issues such as tariffs. Still, it clouds the outlook for a visit to the U.S. next week by a Chinese commerce official. Republican Senator Tim Scott reportedly will be airing TV ads in Iowa and New Hampshire next week. According to the Associated Press, Scott also plans an announcement on his potential run for president Monday in his hometown of North Charleston, South Carolina. Last month, Scott formed an exploratory committee allowing him to raise money while weighing a White House bid. Another development for Disney as the company engages in a high-profile fight with Florida Governor Ron DeSantis. The world's largest entertainment company is dropping plans to relocate 2,000 California workers to a new corporate campus it was building in Florida. Disney's also closing a luxury hotel at its Orlando amusement park. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
The moment news breaks, no one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
Live from New York City this morning. Good morning to you all. Just getting some comments from the White House Press Secretary, Karine Jean-Pierre. Comments on the debt ceiling negotiations. The president will get an update from the negotiating team a little bit later today. Here's an update on the Treasury cash balance, and it doesn't make for pretty reading right now, I've got to say. The cash balance has dropped to $68.3 billion as of May 17th. So this is the most recent data. That's down from $94.6 billion a day earlier. These numbers can be super volatile. So compare the latest to where we were a week ago. The latest is 68 billion, a touch higher than that. A week ago, 140 billion. Yeah. TK, the story's moving quickly going into the so-called X date.
To you, me, and the Everett Dirksen, that sounds like a lot of money. And I've been told by experts that is not a lot of money. And the trend here, even though you say it's volatile and it could pop up on a Monday when Abramowitz finally sends in her tax check, I mean, that could happen. But the answer is this trend, Lisa, is not good. I mean, this trend is just flat out not good.
Which is the reason why it's hard to take the risk of an accident totally off the table. And I think that that's what some people have been saying.
But Lisa, this speaks to why the president is cutting this trip short, right? There is a feeling that this has got to happen quickly. When Treasury Secretary Janet Yellen came out and talked about early June, maybe as early as June 1st, there was a feeling that there was a multi-week cushion in the mix, maybe a month-long cushion. I'm not sure people feel that
Where are we right now
on that?
I would agree with that.
Where's that date right now?
We
June
don't
1?
really know.
I think it actually feels like it might be early June, as opposed to early June with a one-month cushion. That maybe the early, middle of June might be where we need to make a deal.
Okay. Right now, we're going to go to someone who knows the answer to these questions. She's working on it full-time from Japan. Anne-Marie Horton joins us, our Bloomberg Washington correspondent. Among the images, the remembrances at Hiroshima, in a day at 6 p.m., make it 7 p.m., where G7 leaders, I assume, are meeting to greet and having dinner. Anne-Marie, what was the emotion at the memorial to all that we have in Hiroshima? What was the emotion this morning?
Well, obviously, it's a very emotional day. It's a powerful statement to have President Biden alongside these other G7 leaders go tour this grave site, the A-Dome, but also the museum, which for anyone who's been there is a very chilling effect. And of course, then you have the Prime Minister of Japan really wanting to use this moment. This is his hometown, and he wants to talk about the future, and he wants to make sure that nuclear nonproliferation is on the agenda. Two things really come to mind for me. I have been to the Hiroshima Museum before, and I've been to it again recently on this trip. And what stands out to me now more than ever is at the very end, there's an exhibition about atomic nuclear weapons around the world, and it ends on Medvedev and Obama in 2010 signing the New START Treaty. Well, what do we have here today? Russia suspending the New START Treaty as of February. So you could see how far the world has come, but yet so much more we have to do. And then, of course, the symbolism is going to become that much more important when Volodymyr Zelensky, Jenny Leonard and I reported overnight for you guys, Volodymyr Zelensky will be coming to the G7 summit in person to address world leaders at a time when Putin is using threats of atomic war and nuclear weapons as he continues to invade Ukraine.
So that will be a key moment this weekend. And then, Anne-Marie, a long trip home. I'm sorry, Anne-Marie, getting out to Asia is easy. Getting home is always a challenge. Give us the immediacy of the debt study from Japan.
Well, it's very immediate because the president will be cutting the dinner short this evening that he's attending with other G7 leaders to get on the phone with his negotiators. That is also how he started his day. Friday morning here in Japan, Thursday evening, Washington, D.C., on a call with his main team, the likes of Steve Ricchetti, his OMB director, wanting to see where they are to make sure that there is progress moving into the weekend. The mood music is definitely positive. We had Speaker McCarthy coming out saying potentially there could be a deal taking shape by the weekend. You had Senate Majority Leader Chuck Schumer saying, I will recall back senators if there is this deal that we can vote on next week. So the progress is moving forward, but obviously we need to caveat this. Patrick McHenry, the chair of the Financial Services Committee, a key ally for McCarthy, says there's no deal just yet. There's going to be a lot of negotiations going into the 11th hour. That is why the president is cutting his trip short, and that is why he will be leaving Hiroshima directly to Washington, D.C. Sunday evening, because next week is really this feeling of do or die at the moment to make sure they can get this agreement over the finish line and then get it passed.
How much is President Biden coming under pressure from his own party, given the fact that he is open to some sort of work for welfare type of requirement that a lot of people in his party are getting really upset about?
I think the president really understands that it's a divided government, and he has no choice. If he wants to lift the debt ceiling, he's going to have to negotiate with Republicans, which is what he's doing. He said that he does not want to see those work requirements when it comes to, say, access to health care, but didn't make the same sort of red lines for other social safety nets. And that, like you say, Lisa, is going to be a key issue for some progressives. So what the president has to do at this moment, his team of negotiators, is walk this fine line of making sure he is able to give in to some Republican demands to get a debt ceiling lifted. And the United States does not default. June 1st is becoming very close around the corner, and that is potentially a start of when we could see a U.S. default. But at the same time, he doesn't want to go back and redo what this administration hails as massive legislative wins over the past 2 years. You think of hard infrastructure, the CHIPS Act, and obviously most recently the Inflation Reduction Act. So this is the balance the White House is working right now, and is why the president has brought Bruce Reed with him on this trip to Japan to make sure that he is constantly kept up to speed on the negotiations happening in Washington.
AMH, these are serious issues, but you're at the G7, so I feel like I can throw this one in. Can you explain to our audience what a lick spittle is? What is a lick spittle? What is that?
So, Jonathan, I think you're better at the British
good one. Good
translations.
One.
But what I will say, I know what you're discussing right now. What Jonathan, if anyone has not read this story, there's a political story circulating in Europe about what the former Prime Minister Boris Johnson was said to have said about Emmanuel Macron, and his comments about this individual are not very appropriate or polite for a morning television program.
She's so experienced. How professional is that?
If this was Alex Steele and Guy Johnson, she would have gone right for it.
Professional was that?
In the US
that was
morning.
Quality. AMH in Japan, just keeping it right up there, classy. I won't be. So this is what Politico's got to say. There's some words in here I'm not going to say out loud.
Thank you.
According to an ex-aide, Boris said Macron was Putin's lick spittle and a something else. I mean, pretty brutal stuff. I wonder how awkward this might be if the British government meets with Macron this week in Japantown.
I think they're bouncing off everything. And there was a wonderful blurb. I'm going to give The Economist credit, but I really can't remember, where they said the United Kingdom and France, with all of their challenges, are now the special relationship versus the culture wars and oddities of the United States politics. And maybe that's true with the new leadership that we have in the United Kingdom.
The more I'm reading this story,
I'm trying to get out of this in one piece,
I'm dying.
Lisa, help
if you read a lead paragraph that's ever sounded like this, a furious Boris Johnson once privately described Emmanuel Macron as Putin's lick spittle and promised to punch his light out. A key aide to the former UK Prime Minister claimed. What a story.
Well, it's fascinating, especially because at this G7, Emmanuel Macron is going to be meeting with Giorgia Meloni, who he has a really contentious relationship, the Italian prime minister, and they're going to have a sideline meeting that people are really interested what that's going to be like.
Is he just trying to get
fireworks.
hotel rooms in Venice?
Well, all I know is, how much does this color some of the discussions that are going on that also have perhaps a bit of hair on them?
Colourful language, let's put it that way. Colourful language. Let's move on. I'm told we should move on. So we will move on. Priya Misra of TD Securities on rates is coming up very shortly. In the equity market on the S&P 500, just about positive by 0.1%. There has been a lift in this market. Big two-day pop on the S&P 500. Tidy two-day rally on the S&P. Taking the S&P 500 to the highest levels of the year so far. From New York, this is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Almost the end of a long grind, getting you to the weekend with equity markets poised for another morning of gains potentially on the S&P 500, up by 0.1%. On the Nasdaq, up by 0.1%. Also, the S&P 500 yesterday having a little look above 4,200 on the S&P yesterday at the close, just short of that level, but ultimately at the highs of the year. The bumpy road to nowhere, is it starting to go somewhere? I tell you what, in the bond market, it feels that way.
Yes.
2-year, 10-year, 30-year, 2-year, every single day this week higher. Into Friday, so that's Monday, Tuesday, Wednesday, Thursday. 2-year started the week, Tom, south of 4%. Right now, about 4.25.
The collared trades is what I'm looking at. And so what you do is you go to the spread market where Lisa's articulate, or I like triangulate foreign exchange. Euro-yen is one of the things to look at removed from the dollar. And euro is compared to Japanese yen, again, is not bursting through a collar, bursting through the resistance at 150, but it's getting there. And it's been that 4-day getting there.
Let's talk about the FX market. On the euro side, Tom, I'll let you talk Japan in just a moment. On the euro side of things, break of 108 yesterday, stays there just about 107.97.
Yeah,
before
Lisa
today,
knows.
3 days of dollar strength, euro weakness. So this currency pair at the close yesterday, levels we haven't seen since March, actually, near the lows since March. And that euro weakness started to come through off the back of some weaker European data and resilient US data. On the Japan side of things, Tom, I know you want to talk about this. GDP, inflation, and a governor of the BOJ who wants nothing to do with the idea of stepping back anytime soon.
We can't waste time on this, folks, but this weekend, I promise, I'll read up on Japan. You read up on Japan as well. They got 7% nominal GDP. They got 4% inflation back to 1982. Think about that, with the deflation they've had. So they've got a fictitious real growth based on a fictitious monetary policy of massive accommodation. What anybody would say, including Bernanke and Powell at the Laubach Research Conference today, is not if it ain't broke, fix it. It is broke, and it's going to get fixed.
When?
When is, well, the when
That's
is
the
there.
question, isn't it?
Huge risk here to the global system.
Governor Wader right now, Elisa, seemingly displaying very little interest in making a move anytime soon.
Every note that I read about this seemed to confirm that they believe Ueda. They're not going to make any kind of move, even though it does seem implausible and inflation has ticked up. But basically what they say is they're going to come out with a long-term study about how to move away from this. So basically, no risk that at the June meeting they're going to hike rates in any way or abandon the yield curve control. But 6 months from now, perhaps it's a different story.
That's the BOJ speak. Let's talk about the Fed speak through today. Chairman Powell, really the headline event a little bit later on. Here's the quote from Priya Misra of TD. We see another 25 basis point hike, then pause, then rate cuts. We expect the Fed to cut by year end and then cut a whole lot more, Tom, as the economy enters recession.
Appropriate to speak to Ms. Misra, now head of global rates, TD Securities, and we do this with the 2-10 spread, 60 basis points. Her great call of curve inversion a good year and a half ago. Priya, good morning. You are focused not on 10-year, not on 2-year, but in the belly of the curve at 5 years. Why are you suggesting dynamics in the 5-year would be a more attractive place to be?
Sure. So I think it's all about how far you are from the first rate cut and where is the Fed going to cut those rates to. You know, I still think we're about 6 months away from the first rate cut. In fact, the risks are that they don't even cut this year. They start to cut next year. They're so hyper-focused on inflation. They are looking for a slowdown. So I think they might be a little late. But once they start to cut, we think they're going to cut a lot more than what's priced in. I mean, the market's pricing in the, what we're calling the trough rate, which is the end point of those cuts at 3%. I mean, 3% is actually higher than the Fed's estimate of neutral rate. So the market's not pricing in a recession, far from it. I think the market's pricing in normalization. If we actually do enter a recession, and in our view, it's going to be a recession, because of the bank lending standards, because of the lagged impact of rate hikes, as the consumer savings buffer runs out. And now we might even have fiscal drag. I think the only way to get a debt ceiling deal is to get that fiscal drag. So, as the economy slows down, I think the Fed's going to cut a lot